Yes. So yesterday we continued with depreciation concept, and last topic which we were discussing was explanation to section 43 subsection 1, which gives you how to ascertain the actual cost in certain specific situations. Whenever you acquire an asset, actual cost is required to be added to the block asset. Generally, the actual cost is purchase price plus expenditure incurred at the time of acquiring the asset, plus expenditure incurred at the time of installation of asset, plus the interest cost from the date of loan till the date on which the commercial production commences. This is the general meaning. This is the normal definition of actual cost given in section 43, subsection 1. But in certain special situations, what should be considered as actual cost, that is given in explanation to section 43, subsection 1. We have discussed a few explanation and few are pending. So this explanation 1, I will be discussing in this chapter itself along with section 35. Then we have inventory converted into capital asset. This I will be discussing with you when we move on to the chapter of capital gain along with section 45, subsection 2. So when we move on to the chapter of capital gain, I will be discussing this along with section 45, subsection 2. Explanation 2, 3, 5, 8, all these are over. Now explanation 9. Where were you yesterday? What happened to you? Dentist. You can go to dentist afterwards, after 2 o'clock. Nothing will happen in a day's time, don't worry. Yesterday I was shocked to hear a statement. Do you know Dr. Devi Shetty? He is the most famous doctor from southern part of India. You should look at the videos, at least 1-2 videos of him from the YouTube. So yesterday I was just looking at the video. He was called by a news channel. The top 2-3 doctors of the country, they were discussing something. So Dr. Devi Shetty said that as of today, if you have any problem in your body, whatever it is, you consider it to be COVID only and you go to the doctor. Normal, you are normal. Only teeth problem. But he said that the symptoms of COVID are not known properly. So someone may have a headache, someone may have a body pain, you may have a fever or you may not have a fever. So it can be anything. So if you have any smallest of the problems in your body as on today, so then you should consider that yes, it is COVID only. Accordingly, you should go to the doctor. So kindly get tested RT-PCR. Explanation 9. See, before we move on to explanation 9, have you completed input credit in GST? Only basic, that is enough. What do you mean by input credit? Whatever GST you have paid on purchases can be adjusted against the GST on sales. That is called as input credit. Whatever raw material you are using as input, on that whatever GST is paid, that can be set off, that can be adjusted against the GST liability of yours. Yes. So, for example, I have an individual has acquired an asset worth 100 crores. He has acquired an asset worth 100 crores. Asset acquired. What we are discussing? Explanation 9. On this acquisition, he purchased the tax. He paid the tax. How much? 10 crores. So ideally, at the time of capitalization, he should capitalize how much amount? He should capitalize? No, he has paid the tax. No? 110 or 110 crores. 110 crores. This should be capitalized. What the people were doing, they used to capitalize this 110 crores. So depreciation would be available on 110 crores? On this depreciation would be available? Yes or no? This is about income tax. So while calculating income in income tax, they would claim depreciation on 110 crores. And these 10 crores, they would also claim input credit. They would also claim input credit in indirect tax. So number one, they were claiming depreciation. Number two, they were claiming input credit. The point is, government says that you are claiming depreciation on 110 crores now. So this 10 crores of tax which you have paid, you are going to get a deduction in the form of depreciation. So one benefit we are giving it to you. At the same time, for that same 10 crores, you are also claiming input credit. So basically you are getting benefit twice. So that is what people were doing. Government came to know about this. Therefore, government amended the provision. Government inserted explanation 9 saying that for these 10 crores of tax, if you have already claimed input credit in indirect tax, or you are going to claim input credit in indirect tax, then we will not allow you depreciation on these 10 crores. This 10 crores should not form part of your cost of acquisition. So in that case, you should capitalize how much amount? 100 crores. Is that very clear? So double benefit will not be granted. So asset acquired is subject to the levy of excise duty or custom duty, basically indirect tax. So much of the duty in respect of which a claim of credit has been made and allowed. Claim of credit has been made and allowed. See, whatever tax you pay, everything is not allowed as input credit. There might be certain restrictions also. So first of all, there should be a claim which should have been made, and that claim should have been allowed. If both things are happening, then we will not allow you to add that amount to the actual cost. You won't get depreciation on that amount because you have already claimed the benefit in the indirect tax. So if the claim of credit has been made and allowed under the Central Excise Rules 1944, that much amount of portion would not form part of the actual cost. Is that very clear? So explanation 9 is over. We have explanation 13. Explanation 13. This I will discuss when we move on to section 35 AD. When we move on to section 35 AD, I am going to discuss this with you. Just below explanation 13, we also have proviso to section, proviso to explanation 13. This will also be discussed when we move on to section 35 AD. So 35 AD, have you gone through the rates of depreciation? Okay. So these two explanation 13 and proviso to explanation 13, both will be discussed when we move on to section 35 AD. Now we move on to the last explanation, that is explanation 10. Listen to me very carefully. See, it is a job or it is a duty of the state government to ensure that there is a development or growth in the state. And there should not be a concentrated development. The development should be scattered throughout the state geographically. So it should be a equi-development. Every part of the state should develop. For example, you talk of Maharashtra. In Maharashtra, Mumbai is more developed. Pune is more developed. But some part of the Maharashtra, say Vidarbha, is not that much developed. So people will not have an opportunity, employment opportunity, job opportunities. So they'll try to move on from the remote part of the Maharashtra to the cities. So cities will have unnecessary pressure to handle the people, and some part of the Maharashtra which is less developed will have less number of people. So looking at the size of the entire country, we should have at least 10 to 15 metro cities. Because if you, Chennai I have not seen that much, but Mumbai is densely populated. I think every metro city situation is more or less same. So a country similar to the size of India would be much, would have been much more developed. At this position, we should have at least 10 to 12 metro cities, so that the economic activity is concentrated in spread over different cities. Right now, Mumbai is contributing around 38% of India's income tax collection. The only good thing which has happened to this country is there is no natural disaster has taken place in Mumbai till now. If something happens like Gujarat, earthquake like thing in Mumbai, then India will move behind by at least 20 years. Say for example, some earthquake take place, then the trains will not run, everything will be disturbed, and everything cannot be restored in a short span of time. So if your economic activities are focused in one city, if some natural disaster or something like that happens in that particular city, financially will be very backward then for some 10-15 years. That is the reason that your economic activities should be spread over different parts of the country, so that people also do not get, city also do not get densely populated. So we are discussing expansion 10. So the job of every state government is to ensure that the state develops equivalently. So every part of the state should be developed, so that unnecessarily people don't come to metro cities or cities. For that purpose, every state government comes out with some incentive for the industrialist, saying that you go and set up your factory in some backward area of the state, so that backward area will progress. People will have an employment opportunity there only, so they will unnecessarily not get shifted to cities. See, people from rural areas, they have very big houses, they have properties also, but they don't have employment opportunities, so that they will get shifted to urban areas. The problem is, in urban area, they generally don't have that much amount of money to buy a property in urban area, because it is too costly. So that is the reason every city will have some slums. Slum will get developed because the people from the rural area will get shifted to urban area in the search of an employment opportunity, and they will not have that much amount of money that they would buy the flat. That is the reason slum will get developed in a city. Otherwise, there won't be any slum. So if no person would like to leave his rural place and get into city and make his life worst. If got a chance to be employed in his own native place, no person would want to city. That is what government knows, and few state governments are taking conscious effort to ensure that there is a development in rural part of the country also. For example, a particular state government, say Maharashtra government, has come out with an incentive scheme for the state of Maharashtra providing incentive to industrialists, saying that if you set up a factory in the backward area, we will give you the list of backward area. If you set up a factory there, then whatever investment you have done, of that total investment, 20% amount will give you back in the form of subsidy. Now say for example, someone has invested 100 crores. Someone has invested 100 crores in the backward area. So he is going to receive a subsidy of how much? 20% of that, that is 20 crores. Now the question is, we should claim depreciation on what amount? Definitely 80 crores. But what people were doing, people were claiming depreciation on 100 crores only. So central government was also losing, state government was also losing. So central government said that if you have received the subsidy, the cost of acquisition of your asset has reduced. So you should claim depreciation on a lower amount. Have you understood this? So ideally, you should deduct the subsidy amount here, and you should capitalize how much? What should become your actual cost is 80 crores. This should become your actual cost. It should become your actual cost. Is that very, very clear? Now, for example, you have received subsidy of 20 crores. For example, listen to me carefully. Once I complete, if you have doubt, please do ask. You have received a subsidy only on the plant and machinery. You have acquired a plant and machinery for 100 crores and you have specifically received subsidy only for plant and machinery, then the value of subsidy should be deducted from the value of plant and machinery only. But say for example, 100 crores, it is not the investment in plant and machinery. You have invested 100 crores, is consisting of say three things. Number one, plant machinery. Number two, building. And number three, furniture. And the subsidy is 20 crores. Out of 100 crores, plant machinery say 60 crores, building is 30 crores, and furniture is 10 crores. Now, if you have received the subsidy for entire investment, you know that subsidy is received for entire investment, then what you should do? You should deduct the subsidy proportionately from each of the class of assets. So, 20 crores is a subsidy on an amount of investment of 100 crores. So, basically it is 20%. So, from plant and machinery you should deduct how much? 12 crores. Yes or no? So, plant and machinery should be capitalized at 48 crores. Building you should deduct the subsidy at 6 crores. So, that building will be capitalized at 24 crores. Furniture should deduct subsidy at 2 crores. So, it will be capitalized at 8 crores. Is that very, very clear? So, if you don't know, if you know that subsidy is received for a specific asset, deduct the value from specific asset. If you do not know, but you know that subsidy is received for all the assets, in that case, proportionately you deduct. You find out the ratio of investment in each class asset. On that, based on that ratio, you bifurcate the subsidy, you deduct the subsidy, and then you capitalize the balance cost. Is that very clear? They are not going to ask you such detail in the examination, but still, since it is covered in the module, we are covering. A portion of the cost of an asset acquired is met directly or indirectly by the government, or it is not met by government, it is met by some statutory authority or any other person in the form of subsidy, grant or reimbursement. So much of the cost as is relatable to such subsidy, grant or reimbursement shall not form part of actual cost. Correct? If it is not directly relatable to an asset acquired, then proportionate amount calculated by considering all the assets should be excluded. Have you understood this very clearly? So, explanation 10 is over. Explanation 13 and proviso to explanation 13 will be discussing at a later stage when we move on to section 35 AD. Explanation 1 will be discussing part when we move on to section 35, part will be discussed when we move on to the capital gain chapter along with section 45 subsection 2. Now, let's move on to some special provisions. Section 32 subsection 1 clause 1. This is also depreciation. Listen to me carefully. Do you recollect that when we started the concept of depreciation, we started with accounting depreciation versus income tax depreciation distinction. In that, if you refer to the first point, what is written? Go to that page. Which page it is? Refer to that. 114. Not 114. Eh? 105. Refer to this first point very quickly. I am giving you 30 seconds time. Yes. What it says? In income tax, depreciation will be calculated on block asset. To that, there is an exception. What is the exception? In case of power generating unit, power generating and distributing unit, we can calculate depreciation on individual asset. Means it is similar to accounts then. Once again, move on to second point. There also we have exception. In second point, we are saying that in income tax, we only recognize the WDV method for calculating depreciation. To that, we have an exception. Power generating unit, power generating and distributing unit can calculate depreciation by SLM method. So this is an exception. So now we are moving on to this exceptional part. We are moving on to this exception part. Computation for power generating and distributing unit. They are having two options. Option 1, let them go for block of asset method with the WDV. Block of asset means they will calculate depreciation on group of asset and they will be required to follow WDV method. In that case, additional depreciation will also be allowed to them. And the rate of depreciation will be as per Appendix 1. Yesterday I gave you a homework, that rate of depreciation. That rate of depreciation is given in Appendix 1. So if any SSE is following Appendix 1, listen to me carefully. If any SSE is following Appendix 1, means he is following block of asset and WD method. In that case, he will be eligible to get additional depreciation. But the power generating unit also have second option. They can follow individual asset and SLM method, similar to accounts. In that case, the rate of depreciation are different, but they are not given in the module. So if at all the examiner would ask you some question based on this, then he would be required to give the rate of depreciation in the question. But those rates in income tax, they are given in Appendix 1A. They are given in Appendix 1A. If you depreciate the asset as per the rates given in Appendix 1A, then additional depreciation will not be allowed. So additional depreciation will be allowed only if you follow the block method and WDV. Correct? By default, this option 1 will be made applicable. By default, option 1 will be made applicable. If the power generating or distributing unit wants to go for option 2, then they have to make an application. Not application, basically they have to inform. They have to intimate the income tax officer that we want to go for option 2. So default option is option 1. If you want to go for option 2, you have to intimate the assessing officer. And this option is required to be exercised only once. Once you exercise one option, then you don't have the opportunity to move on to the another option. Year wise, you cannot exercise the option. Once you have selected option 1, you have to stay in option 1 forever. Is that very, very clear? Yes or no? Okay. Listen to me, don't talk. Consequences if the assets are sold. Consequences if the assets are sold. This is theory, which is this entire theory this entire theoretical part. I have made a small flow chart. I'll explain it from this only for formality. If you want to read that paragraph, you can read at home. But day before examination, this will be quicker to have a glance at it. Now, second part is, if the power generating unit or a power generating and distributing unit, it sells the asset, then how they will calculate the profit or loss on sale of asset. That is what is explained in this flow chart. If they sell the asset, then the computation of profit and loss would be done based on whether they have gone for option 1 or option 2. What is option 1? Block of asset and WDV. If they have gone for option 1, that is block of asset and WDV, that is correct, additional depreciation will be allowed. But in that case, if they sell one of the assets from the block, then the profit loss on sale of asset, generally we don't calculate on sale of individual asset. But when do we calculate? That is what we had already discussed yesterday in example number 1. When your closing WDV turns out to be negative, or you have sold all the assets in the block. Correct? So, if the power generating unit or power generating and distributing unit is going for the first option, in other words, they are following block method and WDV for the purpose of computation of depreciation, thereafter they sell off the asset, then the treatment would be same as what we had discussed yesterday in example number 1. Do you recollect? If the closing WDV is positive, there are assets in the block, then you will have depreciation. Other cases you will have either short-term gain or short-term loss. So, no separate discussion is required. Computation of profit loss on sale of asset by power generating and distributing unit. If the SSE had opted for block of asset and WD method for computing depreciation, in other words, he had opted for option 1, then profit or loss on sale of asset will be computed as discussed in case 1, case 2, case 3, case 4 in example number 1. Where is that example? Do you recollect? Na? That example, if you want to write the page number, it is which page? Page number 110. So you can give the reference, refer page 110. Now the right hand side, if SSE had opted for individual asset and SLM method for computing depreciation. Let me give an example, and in fact in the form of an example I would be asking a question related to accounts. For the time being, forget about income tax, you give me answer based on accounts. Say for example, you have acquired an asset and the cost is 1 lakh rupees. So this is you call this as original cost in accounts. Depreciation, you are depreciating the asset at 10% SLM. So what will be the depreciation for year 1? Year 1 depreciation would be 10,000. WDV at the beginning of year 2 would be 90,000. What will be depreciation for year 2? 10,000 only, because you are following SLM. And your WDV at the beginning of year number 3 is 80,000. Now I am putting 3 possibilities here. Possibility number 1, you should tell me the journal entry. Tell me the journal entry. If the selling price of this asset is sold, if the selling price of this asset is 75,000, what journal entry you would pass? Definitely there is a loss. What journal entry you would pass? Bank account debit how much? 75. P&L account debit 5,000 to asset account. Correct, huh? This is one possibility. Another possibility is selling price is 90,000. So entry would be what? Bank account debit 90,000 to profit and loss account how much? 10,000 to asset account 80,000. This first and second case, even 11th standard student will be in a position to answer. If selling price is 1,05,000, bank account debit how much? 105. 2. Asset account how much? 80,000. P&L account how much? 25. Not 25. Then how will your journality would tally? Yes? No, what is your final answer? To profit and loss account how much? So what should we do then? To P&L 5,000. Think about it. 20,000 to P&L. Balance to capital reserve. This was taught to you in CA foundation. When the selling price is more than the original cost, the excess amount of selling price over and above the original cost would indicate a capital profit. It should be transferred to capital reserve. See, what you have debited to profit and loss account over a period of time is only 20,000 rupees. So you can't credit your profit and loss account more than what it was debited. Correct? Huh? So to profit and loss account will be 20,000 and to capital reserve it will be 5,000. Have you understood this? Now this same thing, same 100% same would be the tax treatment when a power generating unit is following individual asset and SLM method for computing depreciation and they have sold the asset. But just the terminologies used in income tax are slightly different. That is what I would explain to you. Otherwise everything is same. If the asset is sold for 75, in accounts you say that there is a loss of 5,000. But in income tax we don't say that there is a loss on sale of asset 5,000. We say that this is terminal depreciation. We call this as terminal depreciation. The life of when you sell the asset, the life of an asset in your books of accounts, it is ended. So it is getting terminated. So whatever loss you have, that is termed as terminal depreciation. And this terminal depreciation is allowed to as deduction. Where? In section 32. So this 5,000, section 32, you can claim deduction 5,000. This is called as what? Terminal depreciation. Is that very clear? Okay, let's move on to next part. We have a profit on sale of asset, but instead of profit on sale of asset, we say that this term will be called, this amount will be called as balancing charge. It will be called as what? Balancing charge means on this balance you have to charge the tax. And the section is section 41 subsection 2. As per that, this 10,000 would be called as what? Balancing charge. Now, last part, this 20,000 is nothing but same na? That should also be termed as what? Balancing charge as per section 41 subsection 2. This 5,000 would be taxable under capital gains. Capital gains. And the relevant section is section 50A. Section is 50A. Yes, have you understood this? Very simple. Shall I proceed? See, everything is written here. If the SSE had opted for individual asset and SLM method for computing depreciation, selling price is less than WDV, loss on sale asset equals to WDV minus selling price, it will be allowed as deduction as terminal depreciation under section 32 under that PGBP in the year of sale of asset. If the selling price is more than WDV, then this flow chart is further divided in two parts, whether the selling price is also more than the original cost or not. The part 1 is selling price is more than WDV, but your selling price is less than equal to your original cost. In that case, there is a profit on sale of asset, that is nothing but selling price minus the WDV. This profit on sale of asset is termed as balancing charge, will be taxable under that PGBP in the year of sale as per section 41 subsection 2. So we have completed section 41 subsection 2 also. On the other hand, if your selling price is more than WDV and it is also more than the original cost, then the difference between original cost and WDV. In our example, the original cost was 1 lakh, WDV was 80, difference was 20. That 20 indicates a revenue profit that would be taken to profit and loss account. Forget about profit and loss account. That will be taken to the head of PGBP under section 41 subsection 2. Tax will be levied. And selling price minus the original cost. Selling price is 105, original cost is 1 lakh. So the profit is 5. This indicates a capital profit. This will be taxable under that capital gain under section 50A. Is that very, very clear? So this is completed depreciation in case of power generating unit or power generating and distributing unit. This discussion is over. Now we have expansion 5. I will just read right now. You may not understand right now why such kind of expansion is made. The reason behind it, I will not be in a position to explain you right now, because for that you should know the chapter of capital gain. If you don't know the chapter of capital gain, you can't understand the reason behind such kind of explanation. Explanation 5. This is explanation 5 to section 32 subsection 1. See, this is not the explanation to actual cost definition. This is the explanation to the depreciation. Explanation 5 says depreciation has to be allowed even if it is not claimed by the SSE in his return of income. In other words, it is mandatory to claim depreciation. Means, while filing your income tax return, if you have forgot to claim the deduction for depreciation, then it is a duty of the income tax officer to allow you deduction for depreciation. If you forget to claim the deduction for depreciation, your income will increase or it will reduce. If you forget to claim the deduction for depreciation, your income will increase definitely. Then why they are forcing you to get claim the depreciation mandatorily? Because few people were fooling the government. In this case also, they were not claiming depreciation. People who do not know the chapter of capital gain will not come to know about the reason behind this. In capital gain, we have something called as indexation. In capital gain, we have something called as indexation. So when you sell the asset, generally the profit is selling price minus the cost price. But in capital gain chapter, if the asset is a long-term asset, you have holded that asset for a very long span of time, then we don't deduct selling price minus cost price. We deduct selling price minus inflated cost price. Inflated cost price means to that cost of asset, we would apply some index numbers and we will inflate the cost. We will give the effect of inflation to the cost. If you give the effect of inflation to any amount, that amount will increase. So that inflated cost will be allowed to as deduction. I am trying to explain. If you understand it right now, that is okay. Otherwise, we'll take up when we get into capital gain. So my point is, in case of building, because of the appreciation in the value of land, the value of building will also increase. The point is, generally in case of a depreciable asset, section 5050 is applicable. Depreciable asset, you will claim deduction for depreciation. Once you claim deduction for depreciation, that asset is forming part of your block of asset. And if the asset is forming part of your block of asset, and in future if you sell off the asset, then the profit loss on sale of asset will be as discussed in example 1, case 1, case 2, case 3, case 4. Are you recollecting? What used to happen is, intentionally people did not claim depreciation on building. Why na? Because of the value of land in that value of building, the value of building on an overall basis, it would appreciate. The appreciation in the building because of increase in the market price of land was much more as compared to the benefit of inflation. Benefit of inflating the cost is given in when? Given where? Capital gain. While calculating capital gain, instead of selling price minus cost price, we deduct selling price minus the inflated cost price by applying the inflation. For applying the inflation, we have some index numbers. So I am trying to tell you that the increase in the inflation, increase in the cost due to inflation was less as compared to actual appreciation in the value of building. And if you take depreciation on building, that building will get into the block of asset. In that case, any gain which is arising on sale would be taxable as per section 5050. It will be taxable as per section 5050, and tax would be levied at normal rates. Normal rates means if you are a company, 30%. If you are a company, then 30% tax will be levied. But if you don't claim depreciation on building, then in future if you sell the building, you will have two advantages. Number one, you will get a chance to deduct the inflated cost, thereby your taxable amount will reduce. And number two, the profit element would be taxable at flat rate of 20% instead of 30%. That would be taxable as per section 112 at the rate of 20%. So because of these two advantages, people used to intentionally not claim depreciation deduction. But now by inserting expansion 5, government says it is mandatory for you to claim depreciation. Have you understood? I do not know whether you understood or not. People not knowing the chapter of capital gain is difficult to understand as of now. I have tried my best, but if you are not understood, don't worry. When we get into the chapter of capital gain, we'll understand the indexation once. Then we will be in a position to correlate what I am trying to tell you. But as of now, you remember that claiming depreciation is mandatory. So if you forget to claim the depreciation in your income tax return, it is a job of the assessing officer, it is a duty of the assessing officer to allow you depreciation deduction. And thereby I am telling you, those people to whom this explanation, the reason behind the provision you have not understood now, I can just say that by giving you depreciation forcefully, government is not giving you benefit. They are not thinking about you, they are thinking about them only. Because if you claim depreciation, then in future there are chances that they may get higher amount of tax. If you don't claim depreciation, when you sell the building, they will get lower amount of tax. So they want you to claim depreciation. Have you now understood something? Anyway, now we move on to last point with respect to depreciation. This is the last topic in depreciation, and that is depreciation in case of succession, amalgamation and demerger. Amalgamation chapter. Do you understand amalgamation now? Succession, do you understand succession? Demerger? Anyway, I'll take one example to make you understand very quickly. Please focus here. I don't have that much time to give to this topic. Amalgamation. Say for example, there is one company, Tata Limited. There is one company, Bata Limited. Both this company, they merged their businesses, means they transferred their businesses. In joint venture, two people will come together to do business now. Similarly here, two companies will liquidate their respective businesses and they will merge their business into one, that is called as amalgamation. So they have formed a new company, Batata Limited. Potato. So this company Tata Limited will be called as a amalgamating company. Tata Limited, Bata Limited will be called as a amalgamating company. Batata Limited will be called as a amalgamated company. Second is demerger. Say for example, there is company Reliance Industries Limited. Reliance Industries Limited, this is a company, they are into number one, oil and gas business. They are into oil and gas business. Number two, they are into textile business. They are also into retail. And finally, they are also into telecom. What they have done is, this telecom business now, telecom business they have transferred to a new company called as Reliance Jio Communication Limited. Reliance Jio Communication Limited, they formed one company and they transferred the telecom business of Reliance Industries to Reliance Jio. In this case, Reliance Industries Limited is not going to liquidate. They will continue with the remaining three line of businesses, and the telecom business entirely will be transferred to Reliance Jio Communication Limited. So all the assets and liabilities pertaining to the telecom division will be taken over by Reliance Jio. This Reliance Industries will be called as a demerged company. Will be called as what? Demerged company. And Reliance Jio will be called as a resulting company. Resulting company means the company which has come into existence because of this demerger exercise. Because of this demerger exercise, the company which has come into existence will be called as a resulting company. So in this example, Reliance Industries will be called as a which company? Demerged company, and Reliance Jio will be called as a resulting company. I move on to third example. Say for example, Mr. Manoj, people were missing you like anything yesterday. You do not know, you are not aware about how people, to what extent people are loving you. First one being Ishwar. Mr. Manoj is a sole proprietor. He is a sole proprietor. He is having his own business. In sole proprietor, the biggest risk of doing business in a sole proprietorship is your liabilities are unlimited. Your liabilities are unlimited. So Manoj got his business converted into a company. He decided to convert his business into a company to take the advantage of limited liability. So he started M Private Limited. M Private Limited. This is a company. The business with the sole proprietor will be called as a Mr. Manoj will be called as a predecessor. Will be called as a predecessor, and M Private Limited will be called as a successor. Will be called as a successor, and this entire exercise will be called as a succession. Will be called as a succession. So now we have completed this. You have understood the meaning of amalgamation, demerger, and succession. Now the point is, listen to me very carefully. Point is, say for example, here the amalgamation is taking place on 26 January 2021. This demerger is also taking place on 26 January 2021, and the succession is also taking place on 26 January 2021. Meaning thereby, up to 25th of January, the assets were used by the old entity. In case of amalgamation, old entities are called as amalgamating companies. In case of demerger, the old entity is called as demerged company. In case of succession, it is called as predecessor. So up to 25th of January, assets were used by the amalgamating company or the demerged company or the predecessor. From 26 January onwards, these assets will be used by new entity. That is either the amalgamated company or the resulting company or the successor. So the question arises that the asset is used by the old entity for part of the year and it is used by the new entity for part of the year. How do we calculate depreciation? Who should get the depreciation deduction? So for that, government has made a separate provision wherein government says there will not be any change. Listen to me carefully. There will not be any change in the manner of calculation of depreciation. Calculation of depreciation will remain the same 100%. There will not be any change. It is 100% same. But once the depreciation is calculated, that depreciation is required to be bifurcated between the old entity and the new entity in the ratio of number of days for which the assets are used by them. It is required to be bifurcated in the ratio of number of days for which the assets are used by them. Have you understood the provision? Now, for example, listen to me very carefully. Listen to me very carefully. For the purpose of calculating depreciation, the assets, will divide the assets into two parts. Number one, common assets. Number one is common assets. What do we mean by common assets? Common assets are those which are used by the old entity as well as the new entity. So part of there they are used by old entity, part of there they are used by new entity. So these are called as common assets used by old entity plus the new entity. These assets we can term it as common assets. See, this common asset term you will not find out anywhere in the book. I am just using for your better understanding. Then we have uncommon assets. What do you mean by uncommon assets? Uncommon assets are those which are acquired by the new entity, which are acquired by the new entity and they are used by the new entity. So these assets are used only by new entity. Now the question is on this uncommon asset, you should get, who should get depreciation? Only the new entity should get depreciation. So depreciation deduction is allowed only to new entity. Yes, is that very clear? Now, common assets, depreciation will be calculated as if there is no amalgamation, there is no demerger, there is no succession. Forget about it. You assume that succession, demerger, amalgamation, etc. has not taken place. And then you calculate the depreciation in the normal manner. So you take the opening WDV of old entity, to that you add the assets which were acquired by the old entity. The assets which are acquired by the new entity, only new entity is going to get depreciation, that is already taken to the right hand side. So you take the opening WDV of old entity, to that you add the assets which were acquired by the old entity, you take the total, from that you deduct the assets which are sold and those assets were pertaining to the old entity. Selling price you deduct, then the balance will be called as WD for charging depreciation. On that you calculate normal depreciation, additional depreciation, whatever is applicable. Once you have done the calculation, you have arrived at the amount of depreciation. Now this provision is asking you to bifurcate the depreciation. Now to just bifurcate the depreciation in the ratio of number of days for which the assets are used by the old entity and the new entity. For example, broadly, this depreciation can be of three different categories, or this common asset can be of three different categories. For example, it has old assets. Old assets means those are used from 1st April 20 to 31st March 21. It may have new assets. Say for example, acquired up to 3rd October. Acquired up to 3rd October 20 means which rule will be applied? Full rule will be applied. It may also have new assets. Acquired on or after 4th October 20. Let me take some date. Here I am taking the date of acquisition as say 1st July 20. And here I am taking the date of, are you understanding now? Date of acquisition as 1st January say 21. In our example, when the amalgamation, demerger, succession has taken place? 26th of January. So 26th of January 2021 is the date of amalgamation, date of succession, date of demerger. Now this depreciation, listen to me very carefully. Depreciation is required to be calculated in a normal manner. Depreciation is required to be calculated in a normal manner. Once you have calculated the depreciation, that amount of depreciation should be bifurcated into three parts. Part 1, depreciation on those assets which are old assets which are used for the entire year. Number 2, those assets which are newly acquired and they were put to use for more than 180 days. And number 3, those assets which are newly acquired and they were put to use for less than 180 days. So in this first category of asset now, see, depreciation is already calculated. What we are doing is bifurcation between the old entity and the new entity. For that purpose, first of all, depreciation is required to be classified in three parts. Now, you have to calculate number of days. For the old entity, it will be number of days starting from 1st April 20 to 25th January 21. Now, 26th January will not be taken into old entity, it will be taken into new entity. So, you count the number of days from 1st April 20 to 25th January 21. So, pick up the calculator. April 30 days, May 31 days, June 30 days, July 31, August 31, September 30, October 31, November 30, December 31, January 25. 300 days. So 300 is to what? 65 now. January will be having how many days left from 26th to 31st? 6 days. 6 days of January, 28 days of February and 31 days of March will be 65. So the depreciation pertaining to the old assets which are used throughout the year should be bifurcated between the old entity and the new entity in the ratio of 300 is to 65. Have you understood this clearly? Next, depreciation on those assets which are newly acquired and they are put to use for more than 180 days should be bifurcated between the old entity and the new entity in the ratio of number of days for which the assets are used by them. So this time we will calculate the days from 1st of July. So July, how many days? 31 days, because the asset was acquired on 1st July now. So July 31 days, August 31 days, September 30 days, October 31 days, November 30 days, December 31 days and January 25 days. How much? 209 is to 65. So depreciation, listen to me carefully, don't talk. Listen to me very carefully. Please don't get confused. Don't think that we are calculating depreciation based on number of days. No. Depreciation is already calculated. On this asset, depreciation might have been calculated for how many months? On this asset, depreciation might have been calculated for how many months? Entire 12 months. Full depreciation. So there is no change in the depreciation calculation. It is just the question of bifurcation. Apportionment is being done in this ratio of number of days. Depreciation calculation, this number of days is not taken into account. Have you understood? So you have to segregate the depreciation on new pertaining to the new asset which is acquired and put to use for greater than 180 days, and that depreciation should be bifurcated between the old entity and the new entity in the ratio of 209 to 65. See, this is a comprehensive discussion. After this, I can give you one question as homework. That is the reason I am taking a lot of varieties in the example itself. New asset, this is acquired on which date? 1st January 21. 1st January 21. So it is on or after 4th October. Half rule is required to be applied. Half rule is already applied. Depreciation is already calculated. Now we need to just do the bifurcation. So the old entity number of days would be taken from 1st January 21 to 25th January 21. That would be 25 days is to 65 days. So old entity and new entity depreciation will be bifurcated in the ratio of 25 is to 65. See, proviso says depreciation should be apportioned between the old entity and the new entity in the ratio of number of days for which the asset is used. A new asset which is acquired on 1st July, it was not used for the month of April, May and June. And the new asset which is acquired on 1st January 21, it was not used for April to December 20. Correct? Huh? Have you understood? What is the conclusion? You are calculating depreciation based on number of days. Depreciation is calculated in the same manner. There is no change at all. Once the amount of depreciation is ascertained, thereafter this provision will come to play. Is that very clear? This provision is not for calculating depreciation. This provision is only for apportionment, bifurcation of depreciation between the old entity and the new entity. Is that very clear? Shall I proceed? Read this, not now, as part of homework. Depreciation in case of succession, amalgamation, demerger. We move on to question number 7. Question number 7. Quickly will complete. Maximum I can devote 3 minutes time to this. A firm is engaged in providing transport services. What do you understand by transport services? No one? What do you understand by transport services? They are into which sector? Service sector. So what is the consequence? What is the consequence? No additional depreciation. Additional depreciation is available only to manufacturers and power generating units. If these points do not click in the examination, if you calculate the additional depreciation, you are gone. No additional depreciation. You can mark this point as very, very important point. Day before examination, kindly refer this. A firm is engaged in providing transport services, owns plant A and plant B on 1st April 2020. Rate of depreciation is 15%, depreciated value is 30,000. So what is depreciated value? Opening WDV, in that you are having two plants, plant A and plant B. It purchases plant C on 1st June 2020 for 20,000. So this plant is acquired by the old entity and full depreciation will be allowed. The firm is getting converted into company with effect from 26 January 2020. So this is called a succession. When your sole proprietorship business gets converted into company, that is succession. When your partnership firm business gets converted into company, that is also called a succession. These words you will not understand right now because this section pertains to capital gains. Forget about this. Even if this sentence is not given the question, your answer is going to remain the same. After conversion, when the conversion has taken place, 26 January 2020. After conversion, the company purchases plant D. So plant D is which asset? A common asset or uncommon asset? Uncommon asset. On plant D, depreciation will be given only to the company. Yes or no? And this was acquired on 10th August 20. What do you understand by 10th August 20? Full rule. Company purchases plant D on 10th August 20 for 70,000. And thereafter company sells. Company sells which plant? Plant A for 6,000. Rate of depreciation in respect of plant C as well as D is how much? 15%. Calculate the depreciation available to firm and company. Okay. I'll try to make the solution. You should do the calculation and give me the answers. Tell me, what is the opening WDV? 30,000. In that you have plant A plus B. What is acquired is plant C for 20,000. So total is 50. In this you are having 3 plants. Assets sold. A is sold for 6,000. So closing WDV value is 44. And we are left with plant B and C. Correct? And one more asset is acquired for 70,000. Plant D. Plant D depreciation will be allowed only to company. This plant D is acquired on which date? 10th August 20. So can you tell me what will be the depreciation on this plant D into 15%? 10,500. So this depreciation will be allowed to company. Correct? Now we calculate depreciation on this 44,000. Multiply by depreciation rate at 15% will give you 6,600. Now this depreciation of 6,600 should be bifurcated. Now first of all you tell me this plant C was acquired on which date? 1st June 20. Correct? Now what you should do, this depreciation of 6,600 should be bifurcated in 2 parts. Depreciation on plant C and depreciation on balance. Why you are bifurcating now? Because plant C is not used for the entire year. It is used only from 1st June. So the number of days for which that plant C is used would be different. So plant C depreciation will be how much? 20,000 into 15%, that is 3,000. What is the opening value? Opening WDV? 30,000. In that you had 2 plants A and B, of which you have sold plant A for 6,000. So balance is 24,000. On that if you apply 15%, that would be how much? 3,600. So this 6,600 we have bifurcated in 2 parts, 3,000 and 3,600. Now this 3,000 depreciation should be bifurcated between the firm and the company. Similarly here also 3,600 should be bifurcated between the firm and the company. Have you understood this very clearly? Now count the days for bifurcating this 3,000. Count the days from 1st June. June how many days? 30 days. You are having any confusion? Last benches, you are understanding? This side. From which date to which date? From 1st June to from 1st June to 25th June na. Conversion took place on 25th June. So from 1st June to 25th June. For firm it will be 25 days. For company it will be from 26th June to 31st of March. So June how many days? 26 to 30. That is 5 days. Yes or no? June 5 days. July 31 days, August 31 days, September 30 days, October 31 days, November 30 days, December 31, January 31, February 28, March 31. Give me what is the total? 279. So this 3000 is required to be bifurcated between the firm and the company in the ratio of 25 to 279. Have you understood this? You take the total of 25 and 279 and bifurcate the amount of depreciation, 3000 to 2 parts. Get me the numbers. What should be the share of depreciation given to the firm? 2. $247. I think 247 is the correct answer. $247 and this one is 2753. Similarly, 3600 should be bifurcated between the firm and the company. But this time for the firm it will be taking, we will be taking from 1st of April. So April 30 days, May 31 days, June 25 days. 86 is 279. So bifurcate the amount of 3600 into 86 is to 279. For the firm it will be 848. For the company it will be 2752. Now, what should be the total depreciation to be given to the firm? Yes, 247 plus how much? 848. That will be how much? 1095. To the company, 2750 plus 2752 plus 10,500. That is how much? 16,002. I need confirmation from at least 2 students. Na? 16,002 correct? Is that very clear? So with this question number 7 is over. Two 753. See, the total should come to 3000. The amount which you bifurcate, once you take the total, that should come to the same, na? If this is 2753, correct, na? This one. So instead of 2750, it is 2753. This one is 2752. And this is 2753. So what is the total? I had the doubt only. Yes? Is that very clear? So with this, question number 7 is over. Now we move on to one section. Actually, this section is redundant because the time period during which this section was made applicable is from 1st April 2015 to 31st March 2020. 31st March 20 is already gone. I'll just quickly go through this provision because this is not relevant for your examination. Why I have kept in the notes now? There is, because of one condition I have kept in the notes. In this provision, there is one condition. Because of that condition, I have kept this provision in the notes. Otherwise, examiner is not going to ask you. What it says, listen to me very carefully. I'll quickly explain. I don't have that much time to devote to this concept. Section, first of all, have you all completed the earlier question? Madam, what she is doing? What are you doing? Asking you only. Not completed. See, my speed is lowest. If you are behind me, then believe me, you will be in a position to write only 50 marks paper. Section 32 AD. Section 32 AD. Deduction for Manoj, yesterday only you visited dentist, na? Don't talk more today. Deduction for additional investment allowance, section 32 AD. See, we had 4 sections. The first one is section 32, subsection 1, clause 2. Then we have section 32, subsection 1, clause 2A. Then we had section 32 AC. Anyway, section 32 AD. So there were basically 4 sections. Out of 4 sections, only 2 are present as of now in the Income Tax Act. Section 32 subsection of clause 2 is normal depreciation. Is what? Normal depreciation. Is there right now also. Section 32 subsection 1 clause 2 is additional depreciation. Additional depreciation. Section 32 AC. I think it expired in the year 1718. I think 1718 was the last year. This was deduction for investment allowance. Deduction for investment allowance. Government wanted to give more impetus to manufacturing sector. So government says, you do heavy investments. Anything beyond 100 crores, you will get deduction of section 32 AC. Later on, the 100 crores was dropped down to around 25 crores or so. But as of now, this section is gone. Up to last year, we had section 32 AD, that is additional investment allowance. Additional investment allowance. So basically we had 4 sections, 2 for depreciation and 2 for investment allowance. Two sections pertaining to depreciation, they are present in the income tax as of now also, and 2 sections pertaining to additional investment allowance, they are expired. Time period is expired. See, what is the basic difference between this depreciation and investment allowances? Depreciation, you will deduct from the value of block. Depreciation you will deduct from the value of block. But investment allowance is not in the nature of depreciation. So you are not going to deduct from the value of block. Those things are not relevant because this section is already expired. But just for a better understanding, I am saying investment allowance, whenever it was allowed as an incentive for making the investment. So that was not in the nature of depreciation. So this is deduction over and above the cost of asset. For example, you invested 10 lakh rupees, then 10 lakh rupees will be allowed to as depreciation over a period of time, and this investment allowance will be over and above that 10 lakh. That was 15%. So 15% of 10 lakh is 1.5%. 1.5 lakhs. So you invested how much? 10 lakh. But how much total deduction on the overall base you will get? 11.5 lakhs. 10 lakh over a period of years in the form of depreciation, and 1.5 lakh in the form of investment allowance. So by investing 10 lakhs, you get deduction for 11.5 lakhs in the form of depreciation and the investment allowance on a combined basis. So now this section is gone, 32 AC, 32 AD, 1920 was the last year, this is also gone. But we are still referring why now, you will realize in some time. Deduction for additional investment allowance. Additional investment allowance shall be allowed at what rate? 15% of cost of new asset. It was allowed at the rate of 15% of cost of new asset. Eligible SSE. SSE should set up an undertaking or enterprise for what? For manufacture or production of any article or thing where in the notified backward area of Andhra Pradesh, Bihar, Telangana, West Bengal. Normal investment allowance, deduction was allowed for all the locations. Additional investment allowance only for the backward area of 4 states. Eligible investment should be made between the period 1st April 15 to 31 March 20. Same that. Do you recollect that note which we had studied yesterday? Additional depreciation would be at 35% instead of 20%. That is also expired. But that also I have kept in the notes. Why? Because last year if you had claimed half depreciation, half additional depreciation, remaining of 17.5 you can claim in the current year. Similarly, here also there is one condition because of which this section is still lying in the notes. Now, you have to make investment where? In the new asset. What is that new asset? New asset is nothing but new plant or machinery, but does not include following, means excluding following. These 5 points are same. We discussed yesterday for additional depreciation, SOP. First S is second plant and machinery not allowed. Second S, ship, aircraft, vehicle not allowed. First O, office appliance not allowed. Second O, asset installed in office premises, residential accommodation, guest house not allowed. Last point P, any plant and machinery for which the entire cost, pura cost, is allowed as either deduction in the form of depreciation or otherwise. Those plant and machinery you can't claim additional depreciation also, you can't claim additional investment allowance also. Now this point number 3, because of point number 3, this section is kept in the notes. What it says, if the asset is acquired, on that asset, additional investment allowance deduction is claimed. Thereafter, that asset is transferred within 5 years, then what is the consequence? Deduction which is allowed to you will be considered as your deemed income in the year of transfer. In other words, if you have acquired some asset in the last year 1920, in the year 1920 you might have claimed deduction for additional investment allowance. Now in this year, if you sell up that asset, that is within 5 years. So whatever deduction was allowed to you in the last year would become your deemed income, would be added to your PGBP income and tax will be levied. So examiner may create a question wherein he will say that investment allowance deduction was claimed in the year 1920 and the asset is sold in the current year. So what you are required to do? Take that amount, add to the income of current year in PGBP. Is that very clear? Because of that reason only this entire provision is lying in the notes. Transfer on account of amalgamation, demerger or business reorganization, these things are not considered as transfer. Here we have written point number 3, asset should not be transferred within 5 years. So if within that 5 years, if the amalgamation, demerger or business reorganization takes place, that would not be considered as transfer. In other words, tax will not be levied. The amount of deduction claimed would not be considered as a deemed income in case of amalgamation, demerger or business reorganization. Basically, these things are exempted. Are you understanding? This is the comparative analysis between the different states. Now this is redundant. Just only for the purpose of analysis I had made this table, so as to make you understand what would be the where you would get more advantage if you invest money. Should you invest money in Andhra Pradesh, Bihar, Telangana, West Bengal backward areas, or should you invest in some other state? Only from the point of taxation, for the purpose of understanding, we had made this distinction. If you invest 100 crores in both, either in backward area of these 4 states or in some other states, then normal depreciation in both places would remain the same. Additional depreciation backward area, it was 35%. Here it was 20%. 30 to 80 additional investment allowance allowed for these 4 states, not allowed for other states. So can you tell me what is the total deduction in the first year itself for these 4 states? Total deduction is 35 plus 15 plus 15, that is 65. So out of investment of 100 crores, 65 crores is allowed as deduction right away in the first year, and 35 crores right away in the first year in case of other states. But out of this 65 crores, depreciation is how much? 50 crores. And 1515 is investment allowance. So what should be deducted from the value of block is only depreciation. So what will be deducted is 50 crores. So what will become the opening WDV of next year? 50 crores. Are you understanding? Even if you don't understand, don't worry. This is not part of syllabus now. I told you only for that one condition I have kept this. Out of this 35 crores, what is the investment allowance here? 0. Entire amount is depreciation only. So what would be the WDV of the beginning of next year? 65. Is that very clear? Not relevant at all. So with this, we have done a very big job. Concept of depreciation is over. Now. 8:58 is right now. Instead of having a break at 8:48. Instead of having a break at 9 o'clock, if we have a break at 9:10, is it okay? Then we'll get into some basic part of the chapter. I don't intend to keep it midway. Midway I should not keep and have a break. So we'll ensure that it reaches some logical point. So let's move on to now only. I don't have any issue in giving break right now, but what will happen is the second session will be bigger. Na? Right now we are fresh comparatively. A second session will be comparatively less fresh. Na? Actually, the lecture should be bifurcated in 3 parts. Na? The first session should be the bigger one. If I am taking the lecture of say 6 hours, the first session should be for 2.5 hours. Second one should be for 2 hours, and the third one should be for 1.5 hours. So that after the break, every time you have to attend less number of hours. That should be the actual pattern. So ideally, we should have a break at 9:30. Ideally, so that morning when you come, you are fresh. In 2.5 hours, will be in a position to cover a lot of things. Anyway, let's proceed. So you know that PGBP chapter, when I started, I skipped everything and directly I moved on to depreciation. But yes, I gave you a background with respect to PGBP, saying that how different this chapter is as compared to the earlier chapters. So the scope of this chapter is very wide. All those things we have discussed with you. Now we move on to definition. I am not going to devote time on this. This you have already learned somewhere in. You had a subject called as organization of commerce. Do you have the subject? You don't have business commerce? Any subject related to business in 11th standard, 12th standard? Commerce subject, na? Maharashtra we call it as organization of commerce. Here you call it as what? Business studies. Okay. In that business studies chapter, there might be definition of business, na? Yes or no? The first chapter itself would be business. In that they would have explained you what is trade, commerce, manufacture, industry, different types of industry, extractive industry, genetic industry, etc. So the definition of business here in the Income Tax Act is same as the definition which you might have learned in the subject of business studies in the chapter of business. It says business includes any trade, commerce, manufacture, or any adventure or concern in the nature of trade, commerce, manufacture. Same definition you had discussed in your business studies chapter. I don't want to get into this. So business includes trade, commerce, manufacture means you might have studied trade and aids to trade, insurance, banking, etc. all those things. So I don't want to get into the details of this, but I just want to tell you that generally business means series of transactions on a continuous basis. But sometimes even a single transaction would be termed as a business and income would be taxed. That is the reason they have written adventure in the nature of trade. Adventure in the nature of trade means isolated transaction. Isolated transaction. In certain cases, even the isolated transaction is considered as a business. Have you understood this? So definition of business, section 2, clause 13. I don't want to get into the details of it. Next is definition of profession. It says profession includes vocation. It is not vacation, vocation. See, if chartered accountancy is a profession, but you just complete your BCom and you become an accountant without any qualification, then you are not into profession, you are into vocation. The difference, see, doctor is into a profession, the compounder is into a vocation. Profession would require a number 1 qualification, number 2 technical training. Education as well as technical training, it is a combination of both. Vocation doesn't require the qualification. It just requires some training. For example, Manoj completed his commerce. CA he left in midway. He completed his commerce, and now he was in dilemma as to what he should do about his life in future. Commerce, now he has stopped the studies. He don't have a chance to go back and start with science stream. What he did, in some remotest part of Tamil Nadu, he went there. There he worked with a doctor as a compounder. He worked with a doctor as a compounder for 3-4 years. Within a span of 3-4 years, he learned which medicines are required to be given for which illness. Also, he learned how to give an injection to the patient. For 3-4 years, he worked with a doctor, and after 3-4 years, he started his own clinic. What is his background? Commerce. Do you know that such kind of doctors are also there in the society? Not in the cities, but in remotest parts, you may come across such kind of doctors who will not display the qualification or the certificate inside his clinic. It is not new. I think one of the news channel had tried to find out these first doctors. In the city of Delhi itself, they found out around 290 such doctors. Metro city. Forget about the remote part. I think in the remote part of the country, there would be only commerce doctors. So, those are into vocation without any qualification, just by their natural skill. They are into that particular job. See, in income tax, there is no difference between a profession and a vocation. Whatever provisions are applicable to business are equally applicable to profession. They are also equally applicable to vocation. So there is no point in making any distinction. We studied the chapter of income from house property. I told you that every income there is a taxability criteria. There is a taxability criteria. So the question is, income from house property is taxable on which basis? Income from house property taxable on which basis? Accrual basis. Accrual basis. Do you recollect? So even if your tenant has not paid you in rent, it has not become irrecoverable. It is debtors. You should take into account. Do you recollect this? Income from house property will be taxable on accrual basis, but recovery of unrealized rent, arrears of rent will be taxable on receipt basis, not payment basis. It is income. Similarly, question arises that income under that profits and gains of business or profession should be taxable on which basis? Yesterday I explained you the difference between those people who are earning income under that salary house property and those who are earning income under that profits and gains of business profession, wherein I explained you one important point, saying that the people earning income under that salary or house property would not make the books of accounts, because there are limited number of transactions. Within a span of 2-3 minutes only, they will be in a position to tell how much amount of income they are going to earn throughout the year. But that is not the case with those people who are into the business or profession, because they enter into numerous transactions. It is not possible for a human mind to remember everything. So, need will be felt by those people to maintain the books of accounts. So, generally, a business organization or a person who is into profession would definitely maintain the books of accounts. Forget about the compliance of the law. He himself will feel the need to maintain the books of account, because every organization or every person who is into profession would definitely like to know whether he has earned profits or he has incurred the loss. So for his own benefit, for his own purpose of ascertaining profit or loss, he would definitely maintain the books of accounts. Now in income tax, we say that whatever books of accounts are made by the business organization or made by a professional, made by a person who is into profession, we are not going to change that books of accounts. In other words, the PGBP income is taxable, is computed, is ascertained based on the method of accounting followed by SSC. Whatever method of accounting is following, by same method of accounting, we will be computing his income. We will be computing his income by following the same method of accounting. Do you recollect when you started learning the subject of bookkeeping and accountancy for the first time in 11th standard? The faculty, the teacher might have explained to you that there are two different methods of accounting. Mercantile system, which is also called as accrual method, and the second one is cash system accounting. Whatever you learned in your 11th standard, 12th standard CA foundation, or whatever you are going to learn in CA intermediate, everything is about mercantile system, accrual method. So in practical life, very less people would follow cash system accounting. Generally, professionals would follow cash system accounting. Why now? For example, you completed your chartered accountancy and you started your own practice. One client came to you and he said that file my income tax return. You said, yes, I'll file 5,000 fees you have to pay. So he said, yes. Now, if you declare income, you maintain the books of account of mercantile system. Now, you have to recognize 5,000 in your books of accounts. You have recognized, you have filed your income tax return, you paid tax on 5,000 rupees, and later on, after a few months, when you go to recover 5,000 from that person, he will bargain with you. And you realize only 3,000. So you already paid tax on 5,000. Actually, you are realizing only 3,000. So this is a problem professionals would face. So generally, professionals would maintain the books of account on cash system. See, you also have the option of claiming deduction for bad debts. If you are maintaining books on mercantile system, you recognize the income as 5,000 and you actually recovered only 3,000. So the remaining 2,000 you can also claim it as deduction, considering it as bad debts. But I am just telling on a generality basis, most of the professionals would follow the cash system. It is not mandatory, they have to decide whatever they want to follow. But if you have learned Companies Act, I am not aware about the section numbers of the Companies Act 2013, but I am aware about the section numbers of old Companies Act, that is Companies Act 1956. In Companies Act 1956, they had one section, section 209. That section 209 says, used to say that every company has to maintain the books of accounts mandatorily, and those books of accounts are required to be maintained as per accrual method, mercantile system accounting, and those books of accounts are required to be kept at the register of the company, so on and so forth. There were a lot of conditions. So my point is, for a company there is a Companies Act which says that you maintain the books of accounts. It is mandatory for you to maintain the books of accounts. For others, there is no such provision, but generally they would maintain. So they would decide which method they want to follow. For companies, the mercantile system is mandatory for maintaining the books of accounts. So if company has maintained the books of accounts on mercantile system, then in income tax also we will calculate the company's income based on the mercantile system only. Others, they have the option to maintain the books of accounts either by mercantile system or cash system. Whatever system they are following, we will calculate income under this head based on that system only. Have you understood some? I'll ask you one point. For example, can a company maintain two set of books of accounts? One for the company law compliance following the mercantile system, the other one following the cash system for income tax. Can they have two set of books of accounts? Yes, answer is yes. But no one would maintain two set of books of accounts because it would require devoting a lot of resources, more number of employees, more number of complications, etc. So generally they would not do that, but still they have an option. Therefore, in income tax we say that income under the head PGBP would be computed based on the method of accounting regularly employed by the SSE. SSE can either follow mercantile system accounting or cash system accounting. What do you mean by mercantile system accounting? It is also called as accrual method of accounting. Accrual method means income will be recorded or income will be recognized when it is accrued, irrespective of whether it is received or not. Expenses will be recognized or recorded in the books of accounts when they are incurred, irrespective of whether they are paid or they are outstanding. What do you mean by cash system? In cash system, income will be recorded or recognized in the books of account only when money is actually received, irrespective of whether the money is received for the last year or the current year or the next year. So we just look at the flow of money. If money comes in, then income will be recognized. If you don't get money, don't recognize the income. Similarly, in cash system accounting, expenses are recognized in the books of accounts or recorded in the books of accounts only when they are actually paid. Whether they are paid for the past year or the current year or the next year, that doesn't make any difference. This is what is there in different methods of accounting. So when the income is recorded in the books of accounts, in case of mercantile system, income is recognized in books when they are accrued during the previous year, irrespective of whether such income is received during the previous year or received in the next year, that is following year. Cash system accounting, income is recognized when they are actually received, irrespective of whether they pertain to past year, current year or next year. What about the expenses? In mercantile system, expenses are recorded when they are incurred. In cash system, when they are paid. Is that very clear? Okay. Now question is how you would come to know, that SSE is following mercantile system or SSE is following cash system. So if in the question manufacturing account is given, trading account is given, profit and loss account is given, income and expenditure account is given, then it is an indication that SSE is following mercantile system accounting. Whereas in the question, if receipt and payment account is given, then it is an indication that SSE is following cash system account. This is in general terms I am telling you. CA Institute, in one of the examination, they had given the profit and loss account in the question, and at the end in the question, in the last adjustment, they said that SSE is following cash system accounting. Entering two set of books. First one based on mercantile. So focus here. So now the question is, what is direct method and what is indirect method? In case of which method of accounting direct method will be followed for computing income? If SSC is following which method of accounting? If SSC is following cash system accounting, we will follow direct method for the purpose of computation of income. What will be given to you in the question is receipt and payment account. So you have to do the analysis of receipt and payment account. What you have to do? You have to do the analysis of receipt and payment account. Analysis means the way you do the analysis of trial balance. Na? See, this chapter is very big chapter. For the first time in your life, when you learn the chapter of final accounts, na? A very big trial balance of 1 page was given to you, plus 8 to 10 adjustments were given. When you saw that final account question for the first time in your life, naturally, what doubt would have come to your mind? Na? How I will be in a position to read this entire question till I reach the end? I will forget whatever was written at the beginning. How do I solve such a big question? Same situation will prevail here also, because here also a very big manufacturing, trading, profit and loss account, etc. will be given to you along with lot of adjustments. SSC is following mercantile cash system. Very big receipt and payment account will be given to you having multiple entries along with 8 to 10 adjustments. So you have to do certain markings. In final accounts also, first you do the analysis of trial balance. Now you write this item will go somewhere in the final account. So opening stock will go to trading account, debit side, all those markings you do. Similar kind of markings you have to do here, and similar kind of analysis also we have to do here. Thereafter only we can start with the solution. So this is a very big question, similar to your final accounts. So I am now moving on to discuss what is direct method, or in direct method what approach will be followed for computing the income. When SSC is following cash system accounting, direct method will be followed for the purpose of computation of PGBP income. In direct method, in receipt and payment account, you have to do two things. Left hand side, receipt side, you have to analyze each and every entry. Similarly, payment side also we have to analyze each and every entry. What should be the thought process while you analyze the receipt side and payment side? That is what we need to discuss here. So, manner of computing income in case the SSC is following direct cash system accounting, this is direct method. In direct method, my first step is do the analysis of receipt side of receipt and payment account. For every entry on the receipt side, you have to think whether it is an income or it is not an income. This I have already discussed with you in the chapter of basic concept also. If you recollect, while we discussed the concept of income, at that time you were sleeping. Chapter 1, chapter 2 you slept, no? Basic concept references. No? So do you recollect that when we discussed, we did not discuss the definition of income, but we discussed some features, characters. So in that the same diagram, same flowchart was there also. So this part we have already discussed. Still I am reminding you. Now, what is there? Which page? Not this one, madam. Page number 7. It is there on page number 7. Ishwar, don't open till jump. Na? In the income tax lectures, it is very risky to keep the windows open because people are generally frustrated. They understand everything, but they are always tensed. How I will remember this much amount of every 1 hour he is coming out with 10 different points. Every point is new for me. What is going to happen in my life in the next 6 months? So people are tensed. So you should not take risk of opening the windows. Shall I proceed Focus here, focus here. See, lot of focus is required. Very important chapter, yeah. Listen to me. Receipt and payment account. Receipt and payment account, receipt side. What is the first line? What is the first entry on in the receipt and payment account? Receipt side, first line, what is written? To balance brought down. Yes or no? Opening balance. How do you get this? This is nothing but the last year's closing balance. So the question is, how to get the last year's closing balance? It is nothing but last year's receipts minus last year's payments. The last year's receipts might have been considered while computing income of last year, and last year's payments, in those payments, the expenditure would have been claimed as deduction while computing income of the last year. So the last year's closing balance is nothing but a cumulative impact of last year's receipts minus last year's payments. Last year's receipts might have been taken into last year's income, and last year's payments might have been taken into last year's expenses. They would have claimed as deduction. So last year's closing balance, which has become the current year's opening balance, should be totally ignored, because this amount doesn't belong to the current year. It is just a brought forward amount. So this should not be considered as an income. This is already considered as income the last year. So opening balance in the receipt and payment account should be totally ignored. Besides opening balance, for every entry, you have to think whether it is an income or it is not an income. For example, on the receipt side, you come across to bank loan. On the receipt side, there is an entry to bank loan. That bank loan is not an income, it is a liability. This is a liability, it is not an income, so forget about it. So anything which is appearing on the receipt side and you feel that it is not an income, you put a cross mark there. You cancel that, because that should not appear in the solution. If at all you want, at the end of the solution, you can write a note that bank loan is a liability, therefore no effect is given in the computation of income. Even if you don't write, that is okay, because C Institute doesn't write. Now, referring to that features of income, if you conclude that yes, on the receipt side a particular entry is an income, then you have to think whether it is a taxable income or an exempt income or non-taxable income. For example, you know that agriculture income is not taxable, provided it is earned from an agricultural land situated in India. So agriculture income is exempt in section 10 clause 1. So in the receipt and payment account receipt side, if you come across an agriculture income, you say that yes, this is an income, but it is not taxable, and since it is not taxable, that should not be taken into account while computing the income. At the end, you can write a note at the end of the solution saying that following incomes are not taxable. If the income is taxable, how you would come to know whether that particular income is taxable or not? Yes. Charging section and machinery section. Charging section and machinery section. So the income for which you have the charging section as well as the machinery section, that would become taxable. So if it is taxable, then as per section 14, you have to classify your taxable income into 5 heads of income: salary, house property, profits and gains of business profession, capital gain, and other sources. In each of the head of income, you are having a separate charging section. For example, for house property, we had section 22. For business profession, we are having section 28. So you have to refer to the charging section, apply the conditions and the rules of the charging section, and ascertain this taxable income will get into which head of income. Head wise also we are having charging section. If the conditions or the rules of the particular head, charging section of particular head is fulfilled, your income will be classified into that particular head of income. Is that very clear? So this is the analysis you have done for the receipt side. Every entry on the receipt side, listen to me very carefully. The way you analyze the trial balance, every line you write something, na, this will go to trading account debit side, this will go to balance sheet asset side. You decide, na. Similarly, here also in the receipt side, you have to do the analysis against each and every entry. You are supposed to write something. If it is not an income, cancel it, write not an income. If it is non-taxable, write the section in which it is exempt. Write the section number there. If it is taxable, write in which head it is taxable. So against each and every entry, you have to write something. correct? Then you do the analysis of payment side. The way every receipt is not an income, similarly, every payment is not an expense. On the payment side, if it is written by bank loan, means bank loan is repaid. Repayment of bank loan is not an expense. So on the payment side, if you come across bank loan repaid, it is a payment, but it is not an expense. So bank loan repaid should not be taken into account. Besides that, for every entry you have to think. Payment side, you have the entry for expenses. So you have to think whether the deduction is allowed for particular expense or deduction is not allowed. For example, payment side, you come across, on the receipt side, you came across rent received from house property. On the payment side, you came across repairs of house property, legal charges for making an agreement to let out the property. You came across collection charges, all these things, insurance premium of the property. All these things are not allowed as deduction. In place of this, standard deduction is allowed. So on the payment side, all these expenses will be totally ignored because deduction is not allowed. If deduction is not allowed, those expenses, those payment entries should be ignored. At the end of the solution, if you want, you can write a note for that. Thereafter, if the deduction is allowed, you have to decide under which head the deduction is allowed. Yesterday I got a message from one of the students of this batch only. She WhatsApped me saying that, sir, for example, I am having three properties. Two are self-occupied by me for my own residence. One is used for my own business. Two are self-occupied for my own residence. One is used for my own business. So out of these three properties, which one, whether any property is required to be considered as a deemed let out? No, why? Section 23, subsection 4, we learned any two property at the option of the assessing should be considered as self-occupied. That is only for if HSC is occupying two or more properties for his own residence. The property in which you are doing your business, that will not come to the chapter of IFHP. At the beginning of the chapter in IFHP, at the beginning only, in section 22 charging section, in the third condition, I had bifurcated the property into two now. Let out property and self-occupied property. Self-occupied property was further bifurcated into two, used for residence, used for business. And self-occupied property used for business was further bifurcated into two. If the profits of business are taxable under that PGBP, then the annual value of property is not taxable under IFHP. So if you are having three property, and two properties are self-occupied for residence, one property is self-occupied for your own business, and the profits of business are taxable under that PGBP, then the annual value of that property will not be taken into the head of IFHP. Yes or no? Why I gave you this point right now? There is a reason behind that. Say for example, in the receipt and payment account, payment side, if you come across municipal tax, then definitely deduction is allowed. But deduction is allowed under which head? If the income from the property is taken to IFHP, then deduction is available under IFHP. But if that building is used for your business, then it is not taken to IFHP. In that case, municipal tax can be claimed as deduction while computing income under that PGBP. So municipal tax, you can claim deduction in IFHP or PGBP depending upon whether the property is let out or it is used for business. Is that very clear? So for every expense for which the deduction is allowed, You have to find out, you have to ascertain deduction is allowed under which head of income. So you have to identify under which head deduction is allowed. For example, property is let out, then the municipal tax deduction will be allowed under the head PGBP. Carriage inward, carriage outward, printing and stationery, postage and telegram, factory, gas, lighting, heating, etc. Salary, wages, etc. All these are expenditure relating to business or profession. So deduction will be allowed while computing income under the head PGBP. So you have to identify against each and every expense. If the deduction is allowed, you have to write under which head the deduction is allowed. Have you understood this? So we have done the analysis of receipt side and then the analysis of payment side. Now from this receipt side analysis, you have to take up those entries against which you have written PGBP. On the receipt side, you might have identified now this income is taxable and this income is taxable under the PGBP. So all those incomes which are appearing on the receipt side and they are taxable under the PGBP, you will write business income, BI, short form you will write. Similarly, on the payment side also, you might have identified the expenses for which deduction is allowed under the head PGBP. Against every such entry, you should write BE. Against every such entry, you should write BE. Then ultimately, you will make the statement of computation of PGBP income. While you make the statement of computation of PGBP income, you pick up the incomes from the receipt side belonging to the head of PGBP. From the payment side, you pick up the expenses belonging to the head of PGBP, and then you just make the statement. Statement of computation of PGBP income following the direct method. What you will do? From 11th standard, whatever thought process is developed in your mind by learning accounts, that is going to get totally disturbed today, referring to this. So you need to be very alert. Every time you have to answer. Every time you have to answer. This is very, very important. If you don't understand this, you will not be in a position to start the solution. Your solution, you cannot start. It is impossible to start. So, moral of the story is, every time I ask you a question, each one of you has to answer. If you don't answer, simple thing is, this chapter you have to leave it in option. And the moment you leave this chapter in option, CA Institute will also leave you in option. So every time I ask you a question, you should answer. Otherwise, nearly it will be impossible for you to start the solution. Whatever thought process is developed in last 2-3 years, thinking here is totally different. Exactly opposite. That is the reason I am telling you that every time you should answer. Now we are going to discuss methodology of computation of business income in case SSC is following mercantile system accounting. In case SSC is following mercantile system accounting, which method will be followed for computation of income? Indirect method. Now the question is, why not direct method? That natural question will come to your mind. Why not direct method? So that I'll try to explain you why not direct method and why indirect method. That I'll try to explain you. And then we'll get to then we'll actually get into the indirect method. We'll understand what thought process is required to be applied if you want to compute the income by following the indirect method. Now listen to me very carefully. For example, I have a profit and loss account for you. This is debit side, this is credit side. So debit side, you will be having a lot of expenses. For example, there are 50 entries. There are 50 entries. You have a lot of entry, na? Carriage inward, carriage out of post and telegram, such kind of entries. There are, if you count, there are 50 entries on the debit side. And the credit side, you are having income. And there are, say for example, only 10 entries. Generally, that is what is the case. How do you ascertain the profit? You take up the total of the income. From that, you deduct the total of expenses and you arrive at the amount of net profit. Correct? Huh? So, this is the amount of net profit. This is ascertained as a balancing figure. This is ascertained as a balancing figure. Now, my question to you is, while calculating this net profit, what effect is given to this income? Means, while calculating this net profit, what you have done? You have added this income or you have deducted this income? How do you arrive at the amount of net profit? You take up the total of income, na? Means you are adding, na? And then you deduct the amount of expenses, means you are deducting, subtracting. So incomes are added and expenses are subtracted while calculating the net profit. So incomes are added and expenses are subtracted. So if I ask you, in this net profit, cumulative impact. So in this net profit, what is the effect of income? Income is added, expenses are deducted. Is that very clear? Now before I move on to the discussion, I want to ask a very simple question. Do you believe that this net profit itself is income from business profession? Why so? Because this net profit is as per accounting, and while making this profit and loss account, what accountant had in his mind is the rule of nominal account. He did not follow the rule debit all deductible expenses and losses, credit all taxable incomes and gains. He did not follow this rule, na? He followed the rule debit all expenses and losses, credit all incomes and gains. Whether in income tax that particular income is exempt or it is taxable, he did not think about that while making the profit and loss account. While passing the entry on the expense side, he did not think whether this expense will be deductible while computing income or it will not be deductible. That thought process he did not have now. So, while preparing his profit and loss account, he was having what in his mind? He was having accounts in his mind. He followed the rule of nominal account. He has debited all expenses to the profit and loss account. He has not thought whether this particular expense is deductible while computing income or it is not deductible. Similarly, while passing an entry on the credit side, he has not thought whether this income is taxable or not taxable. He has also not thought whether this income is taxable under the head IFHP or whether it is taxable under the head PGBP. Because his objective was something different and your objective right now is something different. Yes or no? If the accountant himself would have followed the rule, debit all deductible expenses and losses, credit all taxable incomes and gains, then your net profit itself would have been the PGBP income. Yes or no? So why my net profit and PGBP income are different? Because the accounting rules and income tax rules are different. For example, the biggest example he gave, depreciation. The manner of calculating depreciation in accounts and the manner of calculating depreciation in income tax is totally different. Whatever you recognize in books of accounts as profit or loss on sale of asset, that is not recognized as profit or loss on sale of asset in income tax. Correct? Okay. Now, very simple question I am asking you. Think and give the answer. We are not in a hurry. Think and give the answer. Listen to the question very carefully. Out of the 10 entries appearing on the credit side, out of the 10 entries appearing on the credit side, what do you believe? I want to know what is your understanding or what is your belief. Out of 10 entries, there will be more number of entries pertaining to the head of PGBP, or there will be more number of incomes, more number of entries for which the income is exempt or it is taxable under other heads. Did you understand the question? No. If I check the pocket of Manoj, out of 10 things which I find out, more number of things would be such which are used by male, or more number of things will be such that those are used by females. More number of things I will find out which are used generally by males, na? So he will have cigarette, he will have tobacco. Will he have a makeup box in his pocket? No, no. Or maybe he may have a eyeliner he might have taken for gifting to his girlfriend. So moral of the story is, if you take out 10 things from his pocket, more number of items would be such that those are used by males. Correct? Huh? Similarly, on the credit side of profit and loss account, there are 10 entries. My point is, there are 10 entries means basically there are 10 different incomes. Out of those incomes, say for example, on the credit side of profit and loss account, rent received is appearing. But that rent received, where we should take it to? IFHP. On the credit side of profit and loss account, agriculture income is appearing. That is exempt from tax. Correct? Huh? Sales, closing stock, goods given away as free samples, goods distributed as charity, goods, any outflow of goods. Then interest received. So my question is, out of 10 entries on the credit side, what is your understanding, what is your belief that more number of entries would be belonging to which head? Will it belong to PGBP, or you feel that out of 10 entries, 9 entries would be such that they belong to some other heads or they are exempt from tax? So most of the entries would be belonging to the head of PGBP. Yes or no? So now for example, out of 10 entries appearing on the credit side of profit and loss account, say for example 8 entries are belonging to the head of PGBP, and there are 2 entries which are such that either those are income which are exempt from tax. For example, on the credit side of profit and loss account, if you come across agriculture income, then we say that is exempt from tax, or it may be such entry for an income which is taxable but under other heads other than PGBP. For example, rent received is taxable under IFHP. So, conclusion is, out of most of the incomes appearing on the income side, out of the total number of incomes appearing on the income side, most of the entries would pertain to the head of PGBP. Similarly, if I ask you the same question for the expense side, what would be the answer? Definitely, most of the entries would pertain to such an expense for which deduction is allowed under the head PGBP. They are related to PGBP. So, I am telling you that out of 50 entries, 45 entries are pertaining to the head of PGBP, and there are only 5 entries which are pertaining either to other heads, or those are such an expenses for which deduction is not allowed. Now listen to me very carefully. I am trying to explain you what if you follow. See, these things are not written anywhere in any of the books. I am trying to make you understand, because if the question crops up in your mind when you go home, no one is there to answer this. So what we are trying to understand is, when profit and loss account is given in the question, when SSC is following mercantile system, why will we follow the indirect method for computing income? Why not the direct method? What do we do in the direct method? What is the format for computing income in direct method? We pick up the business incomes, from that we deduct the business expenses. Now you tell me, if you want to follow direct method for computing your income in case the profit and loss account is given, what you will do? We will pick up the income relating to business from the credit side. There are how many entries? 8 entries, correct? From the expense side also we will pick up those entries which are pertaining to the head of PGBP, 45 entries. So one by one you will write 8 lines, 8 entries. In your statement of computation of PGBP income, you will write 8 entries, 8 lines. You take the total, put it into the outer column. Then you write expenses list of 45 points. Once again you take the total, put it to the outer column. Your solution would be around 45 plus 8, 53, plus say for example 2-3 lines for taking the totals. Your solution would be of 55 lines. If you follow direct method, your solution would be of 55 lines, which can just start in the examination, it cannot end. That is the reason we don't follow the direct method, because in case of direct method, the solution will be too much lengthier. That is the reason in practical life also we follow the indirect method. In indirect method, my solution will start with net profit as per profit and loss account. Do you recollect the chapter of bank reconciliation statement? What you used to do? You used to start from one point and used to reach at another point. And for reaching from one point to another, you used to do certain adjustments. Some adjustments were added and some adjustments were deducted. Similarly, see in BRS, either you used to start from bank balance as per cash book and you were doing certain adjustment to reach at a bank balance as per passbook, or vice versa was also possible, na? You could also start from bank balance as per passbook and reach at bank balance as per cash book. But here the starting point of solution will be net profit as per profit and loss account, which is your accounting profit. This will be the starting point of our solution. So this is the starting point. Certain adjustment will be added, certain adjustment will be subtracted, and ultimately you will find out the income from business profession as per income tax. So we need to convert this accounting profit into income tax income. Are you understanding? So if I go for direct method, my solution would be of around 55 lines. I don't have that much time to make a solution of 55 lines. So I'll find out the same answer by a shortcut method. By following which method? Indirect method. Now the question is, what do we do in indirect method? In indirect method, we'll focus on these 5 entries. And we'll focus on these 2 entries. So my solution will be only 7 lines plus 2 lines for taking the total. It will get completed in 9 lines. I'll get the same answer. So you can find out the answer by direct method as well as indirect method. If you love direct method, make a solution of 55 lines. But what I am going to discuss in the classroom is only indirect method. Is that very clear? Now the point is, what should be the thought process when you ascertain the income by following the indirect method? The thought process should be similar to a chapter of rectification of errors. In accountancy, you learn the chapter of rectification of errors now. In that, if some account was required to be debited, but you forgot to debit that account, what you will do? If some account was required to be debited and you forgot to debit that account, what you will do? You will debit. You will debit. If some account was required to be credited but you did not credit, what you will do? You will credit. If some account was required to be debited but by mistake you credited, then you will debit with the double amount. So in rectification of error chapter, teacher used to explain you the rectification entry in 3 parts. I do not know what you have learned, but generally this is the way in which teacher will explain you, saying that this is the entry which is already passed. This is wrong entry. They will say this is the correct entry, entry number 2. This entry should have been passed. Then he'll do cancel and he'll find out the rectification entry, correct? So what he is doing now? Whatever, listen to me, whatever wrong effect was given now, he is giving the opposite effect. He is reversing the wrong entry and he is passing the right entry. So whatever entry was passed, you pass the reverse entry of that. Why do you pass the reverse entry? To nullify the effect which is already given. Wrong effect is given, so you nullify the effect and you pass the reverse entry. Then you pass the correct entry. That reverse entry and correct entry you merge. That will be called as a rectification entry. So in rectification, your thought process is nullify the wrong effect. Nullify the wrong effect. If the effect is gone, by mistake the effect of plus is gone, what you will do to nullify? By mistake the plus effect is gone. Something is added by mistake. How do you rectify it? By deducting it. Something is deducted by mistake. How do you rectify? By adding it. Yes or no? So the thought process should be similar to rectification. Are you understanding? Now let's try to apply that thought process here. I will ask you questions and you should give the answer. What we are discussing? Indirect method for computation of income when SSA is following mercantile system of profit as per profit and loss account. In this net profit, listen to me carefully. In this net profit for income, already plus effect is gone. For expenses, already minus effect is gone. Yes or no? Incomes are already added, na? Expenses are already deducted. So in this net profit, I have a positive income, positive effect of income and negative effect of expenses. Now, if this plus effect is correctly gone, plus effect is gone into net profit and is correctly gone, what you should do? Listen to me, apply your brain and then give the answer. If plus effect was required to be given and you have already given the plus effect, now what you will do? You will not do anything because whatever is done is correctly done. So you are not required to do anything. If you have given the plus effect and that plus effect is wrongly given, to nullify that, you will give the minus effect. Yes or no? On the other hand, if minus effect is correctly given, what you will do? Nothing. You will ignore. Last point, if the minus effect is wrongly given, then you will add. You will give the add effect to nullify. Is that very, very clear? Now let's try to get into those notes. Manner of computation of income in case is following: mercantile system accounting. What should be the thought process if you want to ascertain the income, PGBP income from the profit and loss account? Starting point of solution will always be net profit as per profit and loss account. Now I will do the analysis of expense side. See, the way I did the analysis of receipt side and payment side in the cash system accounting, here I will be doing the analysis of expense side as well as income side. So first of all, I am talking about the expense side. These expenses are also divided into those expenses which are debited to profit and loss account and those expenses which are not debited to profit and loss account. What do you mean by those expenses which are debited to profit and loss account? When I say expense is already debited to profit and loss account, means which effect is gone? Minus effect is gone. Huh? If it is correctly gone, then what? Ignore. If it is wrongly gone, then add. Correct? Huh? On the other hand, if I say that expense is not debited to profit and loss account, meaning thereby that expense is not appearing in the debit side. In other words, where would this expense appear then? It would appear in the adjustments. See, in final accounts, what is adjustment? What is adjustment in final account? Just below the trial balance, few adjustments are given now. What is that adjustment? You did not pass the journal entry, so it has not been posted to the ledger account, so it is not forming part of trial. Loss gone. What effect is gone? You have to think before answering. If you don't think, you are gone. Generally, I say that if the question is asked, not my subject, any subject, if any of the faculty is asking you a question and if you give the answer in a span of 10 seconds, believe me, there are 90% chance that the answer would be wrong. Because CA Institute examination subjects and the content is such that You will be required to apply your mind. You can't give the answers the way kids are giving answers in first and second standard. They would just mug up the things and throw the things the moment they see the question. That will not work. You have to think, you have to apply your mind and then give the answer. Otherwise, 100% your answer will be incorrect. Your answer can be correct if you are exceptional. If you are Swami Vivekananda, then anything can happen. But you are not. Correct, na? Do you believe that, na? Listen to me very carefully. If I say, first of all, tell me what is the starting point of my solution? Net profit as per profit and loss account. If I say that a particular expense is not written on the debit side of profit and loss account, it is not written, it is not recorded. So what effect is gone into this net profit? Don't say more or less. I am asking you what effect is gone. So you have three options. Let me give you options. You have a tendency to appear for MCQs, no? Let me give you options. Option 1, add. Option 2, less. Addition, subtraction. Option 3, ignore. Option 4, your favorite option, none of the above. So I am saying you that answer has to be out of these four only. Correct? If I say that particular expense is debited to profit and loss account, meaning thereby minus effect is gone, na? While calculating net profit, that expense might have been deducted. Yes or no? So if I say that particular expense is not written on the debit side, what do you mean by that? Minus effect is gone or not gone? Oi. Oh, listen to me. Now, I'll try my best. Only one example I can think of. That is the last attempt from my side to make you understand. Believe me, this is the optimum level of my mind which I can apply. Now, say for example, in a break, I have given a break. So, Ishwar goes out to have a breakfast. So, the hotel or the place at which he goes to have a breakfast, that hotel owner, he is knowing him very well. So sometimes if he doesn't have money in his pocket, still he will go and have a breakfast and he will say that I will give you money tomorrow. So credit transaction. And sometimes he will have a breakfast and he will pay money at that point of time only. So my question is, he is having some amount of money in his pocket. He has gone there, he had his breakfast and he paid money. Means what effect is gone to his pocket? Plus effect or minus effect? Minus effect. But he said, I do not have money today, I will give you tomorrow. So what effect is gone to his pocket? No effect on. Neither something is added nor something is deducted. In other words, it is ignored. Yes or no? Similarly, hopefully I am successful. Food, na, if you give an example of Indians, they live for 81. So, this is my experience over a period of time. Either you give the example of food or you give the example of children's kids, marriage. You will understand everything. So, if I say that something is debited to profit and loss account, expense is debited to profit and loss account, what effect is gone? Minus effect is gone. If it is correctly gone, ignore. Wrongly gone, add. Yes, is that 100% correct? Have you understood? Okay. If I say that income is recorded in profit and loss account, Means which effect is gone? Plus effect is gone. If it is correctly gone, ignore. Wrongly gone, deduct. Is that 100% clear? Next point, at which you got confused. Same point once again. If an expense is not recorded in profit and loss account, what effect is gone? No effect is gone. No effect is gone. But if that is a business expenditure that should have been recorded, but it is not recorded, what should we do now? We should deduct. You were supposed to deduct, but you did not deduct. You deduct now. Yes or no? Last pointer. Then we'll proceed to the flow chart. If some income is related to the head of PGBP, but it was not recorded in your profit and loss account, means what effect is gone? No effect is gone. But that entry, that income is taxable under that PGBP, so plus income was required to be given, but you have not given any effect. What should we do now? We should add. Yes or no? Income was not recorded, so effect was not given, but it is taxable under that PGBP, so it should appear, so it should be added. Is that 100% clear? Oh, this procedural aspect, nowhere this would appear in the notes. This only my notes I have taken here. Otherwise, these procedural aspects will not appear anywhere in the notes, in any of the books, not even the module. Let us read this now. Expenses we are dividing in two parts. Those expenses which are debited to profit and loss account means what? They are already deducted, means minus effect is gone. If the effect is correctly given, ignore. Wrongly given, add. Yes or no? For that expense, you have to think whether the deduction is allowed or not allowed. If that, listen to me carefully. For every expense which is debited to profit and loss account, you should think whether deduction for that expense is allowed or deduction for that expense is not allowed. If the deduction for that expense is not allowed, means what? Means while computing business income, it is not allowed to be deducted. But have you deducted while computing your net profit? Yes. While computing your business income, it is not required to be deducted. But while computing your accounting profit, you have already deducted. So can I say it is wrongly deducted? So what should you do? Add. Is that very, very clear? This is over. Next, debit side of profit and loss account. Debit side of profit and loss account, you come across municipal tax. And this municipal tax pertains to the income which is taxable under IFHP. So that municipal tax is allowed as deduction where? IFHP. But you have debited a profit and loss account now. Our objective right now is to ascertain which income? PGBP. So while calculating PGBP income, that municipal tax should not have been deducted. Is it deducted? Yes. What you should do? Is that very clear? Last point. Profit and loss account, debit side, an entry is appearing, printing and stationery. Profit and loss debit side entry is appearing, printing and stationery. Means while calculating accounting profit, that amount is already deducted. Do you believe printing and stationery is an expenditure relating to business? So while computing business income, deduction should be allowed. Deduction should be allowed means it should be deducted while computing income. Have you deducted? Yes. It was required to be deducted and you have already deducted. What should we do now? It should be ignored. Is that 100% clear? Now we move on to the, see, generally when we hear the word expense, what comes to your mind, which sign comes to your mind is minus. But we are adding the expenses. That is the reason thought process is totally different. Expenses not debited to profit and loss means what? While computing net profit, they are ignored. Not deducted means they are ignored. Means they are ignored. Means which effect is gone? Neither the minus nor the plus. Correct? Huh? But if minus effect was required to be given, then what? Have you given any effect? You have not given any effect, no? Because those are ignored. But if minus effect was required to be given, you have not given, then minus. Correct? Huh? Last, minus effect was not required to be given and you have not given the minus effect. Ignore. Expenses not debited to profit and loss account means they are ignored while computing accounting profit. If those expenses deduction is not allowed, then deduction is not allowed means while computing income they should not be deducted, and they are not deducted, so we should ignore. Is that very clear? If you have a smallest of the doubt here, please do ask. Otherwise, you are going to face lot of difficulties. Shall I proceed? If some expense part is allowed as deduction, part is not allowed as deduction, once again your thought process would remain the same, whether that expense is debited or not debited. Plus minus now will depend upon the expense is debited or not debited. If expense is debited, then the entire expense is deducted now. But out of the entire expense, part is not allowed. So that part which is not allowed should be added back. And that part which is allowed to be deducted should be ignored. Yes or no? If the same expense, for example, you are using the car for business purpose as well as professional purpose. Fuel cost for the entire year is say 1 lakh rupees. 80% of the time car is used for personal purpose. And on the debit side of profit and loss account, fuel cost return is 1 lakh. Now out of 1 lakh, 80,000 is personal expense. Deduction for that personal expense is not allowed. So while computing income under that PGBP, that 80,000 should not be deducted. But you have already deducted. You have deducted 1 lakh. Out of that 20,000 is allowed to be deducted, 80,000 is not allowed to be deducted. So out of 1 lakh, 80,000 not allowed to be deducted, but you have already deducted, so 80,000 add back. Out of 1 lakh, 20,000 is allowed to be deducted and you have already deducted, so ignore. Yes or no? Let's move on to the right side. Expense not debited to profit and loss account means it is not, no effect is given. If the expense is of such nature that deduction is not allowed, means it should not be deducted while computing the income. And anyway, it is not deducted. It was required to be ignored and you have correctly ignored. So what should we do now? We should ignore. Yes. Next. There is an expense which is not debited to profit and loss account. That expense, no, deduction is allowed, but deduction is allowed under some other heads. So where we should deduct? We should go and deduct in that particular head, na? We should not deduct here while computing PGBP income. Right now our thought process is only PGBP income. Our objective is to just ascertain the PGBP income. So if an expense belongs to some other head, deduction should be allowed there. It should be deducted there. It should not be deducted here. Is it deducted here? No, it is not deducted. So it is not required to be deducted and it is not deducted. So what should we do? We should ignore. Is that very, very clear? Last point related to expense. For example, printing and stationery. You forgot to pass an entry. Do you believe printing and stationery is an expenditure relating to business? Yes. Should deduction be allowed while computing your income? Yes. But they have not passed the entry. So what effect is gone? No, what effect is gone? No effect is gone. They have not passed the entry. Now how can effect go without passing an entry? If I don't punch you, will you have any effect? No, na. You can have a effect only if I punch, na. So only if you pass an entry, there will be some effect. If you have not passed any entry, there will not be any effect. So have you passed an entry? No. So what effect is gone? No effect is gone means it is ignored. Correct? Huh? But that expenditure is related to business, so deduction should be allowed. Deduction should be allowed means while computing income, it should have been deducted, but it is not deducted. What you will do now? You will deduct. Yes or no? So this is required to be deducted. 100% clear? Similarly, just now we had the discussion in context of income. Now we'll have the similar discussion in context of, we had the discussion in context of expense. Now we'll have discussion in context of income. I will not display this, I'll display this expense only. Now you tell me what should I write here and what effect should I give. Here what I'll write? Instead of expense, it will be income. Left hand side, I'll write what? Income credited to profit and loss account. Means it is already added while computing income. Right side, incomes not credited to profit and loss account. Means it is ignored while computing accounting profit. Is that very clear? Now let's move to left hand side. For income, for expense, you think whether the expense is deductible or not deductible. But for income, you think whether that income is taxable or not taxable. Similarly, for expense, if the deduction is allowed, you think deduction is allowed under the head PGBP or deduction is allowed under other heads. Similarly, for the taxable income also, you think whether that income is taxable under that PGBP or it is taxable under other heads. So now here, what we have written? Incomes credited to profit and loss account. Few of you are still searching where the income is written. We are looking at expense and we are discussing about income. Your mental strength will increase, na? A lot of processing is happening. So here what I have written? Incomes credited to profit and loss account means it is already added. Now what we should think? Whether it is taxable or not taxable. If it is not taxable means what? While calculating taxable income, it should not be taken into account. But have you already added? So it is rightly added or wrongly added? Wrongly added. What should we do? Deduct. Whatever effect they have given, if correctly given, ignore, wrongly given, give the opposite effect. Yes or no? Income credited to profit and loss account. Sums. Yes, that is this why we are discussing in so much detail, because you should know now what to add, what to deduct, what to ignore. If something is required to be added and if you deduct now, your income will be higher or lower by the double amount. Are you understanding? See everything when you, I generally say that you might have observed that when you came to 11th standard for the first time, after completing 10th, when you joined commerce and you went to the class for 11th standard, when you started learning the accountancy for the first time, it was a very big challenge for the accountancy teacher to make you understand that DR is not doctor, DR is debit. So that accountancy teacher, to make you understand those real personal nominal rules, used to say that those are golden rules. And in the journal chapter, For every debit and credit effect, he used to repeat the rules. You might have heard those rules at least minimum 500 times only in 11th standard. So you are doing accountancy, you did accountancy in 11th, 12th foundation, now you are in inter, so you are learning accounts since last around 3 years. After learning for 3 years, as on today you say that yes, I am slightly comfortable. But this you are learning for the first time in your life, so it is natural that you will face some difficulties. So when you face difficulties, you should not run. You should walk so that you have time. You should apply your mind. Go slow. The moment your thought process is developed, then you can increase the speed. When you are learning anything for the first time, you have to apply your mind. You have to be very slow, understand everything. Once you understood, speed is just a matter of time. But if you have not understood, never ever in your life you will have a speed. So, don't worry about that. It is not that you are facing difficulties. Everyone who has become a chartered accountant, he had learned income tax for the first time in his life sometime here only in CA intermediate. Whatever difficulties you might be facing, same difficulties are faced by each of the students, and all of them have overcome those difficulties. All of them have cleared the examination. For you it is a new experience. For me it is not. I am habituated to see students struggling here in giving the correct answer. That is the reason I told you, don't give the answers in a span of 10 seconds. Think. It would require application of mind. Not here only, any chapter, any subject. So once again, let us start. Income credited to profit and loss account means which effect is gone? Plus effect is already gone. If it is correctly gone, ignore. Wrongly gone, subtract. So think about it. Income credited to profit and loss account. If it is not taxable, then effect should not have been gone, but effect is already gone. Which effect is gone? Plus. So what you will do? Minus. If the income is taxable, then you should think whether it is taxable under that PGBP or taxable under other rates. For example, in the credit side of a profit and loss account, it appears rent received. Rent received is an income, but in income tax, it is taxable under that IFHP. So that rent received, if it appears on the credit side of profit and loss account, means plus effect is already gone. It should not have gone. It is wrongly gone. So what you will do? Minus. So all those income which are taxable under other heads should be deducted. Is that very, very clear? Sales, closing stock, goods given away, charity, samples, etc., etc., etc. All these entries are related to PGBP. Those entries, if they are credited to profit and loss account, already plus effect is gone. And plus effect should have gone. So it is correctly gone. So what should we do? Ignore. Is that very, very clear? See, this is the reason I did not start PGBP chapter, this part, day before yesterday in the last session. Otherwise, you would have gone from here directly to the hospital instead of office. Now we move on to the right side, last part. That is the reason I told you now, the first session of the lecture should be the lengthiest. Last session should be the smallest, because last session, in your mind, you are thinking when he will leave, I want to run. So if it is only 1 hour, then easily it can go. If it is 2 hours, in 2 hours at least 100 times you will think. So we would plan your sessions in such a manner that the first one would be a bigger one. So that is what I was planning, to have a session from 7 to 9:30 instead of 7 to 9. If you are comfortable enough that, see, if you are habituated to have a breakfast at 9, and if I say that 7 to 9:30 would be a better session, after 9 o'clock we'll think about the food. then the situation would remain the same. Anyway, let's move on to the last part. Income is not credited to profit and loss account. Not credited to profit and loss account means which effect is gone? No effect is gone. If the effect was not required to be given, it is not given, what should we do? Ignore. If the plus effect was required to be given, but if it is not given, then add. Income not credited to profit and loss account. It is not taxable. It is not taxable means plus effect should not have been given, and it is not given. So we should not give any effect. If income is taxable, but under that, under other heads. If income is taxable under other heads, you go under other heads, give the add effect there. But what about the PGBP? While calculating PGBP income, that should have been ignored, and that is, it is correctly ignored. So we should not give any effect, we should ignore. Last point. If you have forgot to pass an entry for sales, sales is related to PGBP, so sales should be taken into account while computing business income. Plus effect should have been given, but it is not actually given. So what should we do? We should add. Have you understood? Now see, what I have done is in the notes. Do you have any confusion there? Shall I proceed? Listen to me carefully. In the notes, everywhere I have given denomination. For example, this is note A. So what I have done now, just below the flow chart, you have note A. In note A, you will find that, please listen to me. In note A, there is one example. There is one example pertaining to this category. Note B, you will have an example pertaining to this category. Note C, you will have an example pertaining to this category. Are you understanding? So wherever I have written A, B, C, etc., for everything you have one example. For example, let me give you one example to make you understand. For example, he is into electronics business. He is a trader. Basically, he is a trader. Manoj Electronics. He is having shop in the city of Chennai. What he is doing now? He is purchasing electronic products from giant companies like LG, Samsung, etc., and is selling in its own shop. Now the LG people, they have, see, by giving this example, now I am targeting 2 points. At the same time, I am targeting 2 points. In Hindi, there is an idiom called as एक तीर से दो निशान. You don't understand, na? By understood something? See, it is very deep. When it comes to translation, you can't translate exactly from Hindi to English. Idioms you cannot translate. Do you understand? Na? Idioms. Difficult to translate a Hindi idiom exactly into an English idiom, because those rhyming words, everything will change. From one arrow only, I am targeting at 2 targets. So I am giving an example to make you understand one point of section 28. At the same time, that would also be one of the example of this. So he is having an electronics shop. He is exclusively selling LG products. LG company. He is exclusively selling LG products. So the LG company representatives came to him saying that, sir, in this year, if you purchase goods worth 2 crores from us now, then if you purchase goods worth 2 crores from us, then we would give you a gift package of 4 days, 3 nights for a Singapore visit. That is what LG has offered to him throughout the year. Earlier, he used to sell the products of LG as well as Samsung as well as BPL, etc., etc., etc. The moment he got the offer from LG, whenever customer comes, LG excellent quality, BPL, very bad company, no service. He is having interest, if he sells more LG products, he'll get to go to Singapore free of cost. So throughout the year, he has promoted only LG products, and up to the end of the year, he has achieved a sales target of 3 crores, much more than what target was given by the company. So next year beginning, company has sent him for his entire family. Company has sent the tickets to go to Singapore and come back. 4 days, 3 nights, hotel stay, everything is free. So you are an accountant working in his office. You are an accountant working in his office. One fine day, you received an envelope. You opened an envelope and there is a ticket, Singapore ticket, hotel stay coupon, etc. Everything is there. So the question is, what entry you will pass? You will pass some entry in the books of account for every transaction, right? So what entry you will pass? You have received ticket, what entry you will pass? Ticket account debit to P&L account. And once you go to Singapore and come back, then P&L account debit to ticket account. Will you pass such entry? No entry, why? It is not a business transaction. So what? Let me change the facts. Say for example, he is Marwadi, so his focus is mostly on money. So he is also into the same electronic business. LG has offered him, saying that if you sell our goods for more than 2 crores, 4 days, 3 nights, Singapore package will be given to you free of cost. He has also achieved a target. He received a tickets. So he called up the LG representatives. I don't want this ticket. You pay me money. How much you are ready to pay? So he said that this package is for 3.5 lakhs. We will pay you 3 lakhs. So he said, no, not 3 lakhs, 3 lakhs, 30,000 rupees. So they agreed. And they sent a check of 3 lakh 30,000 rupees. So he received a check. Tickets he has returned and he has received a check of 3 lakh 30,000. Will you pass any entry in the books of accounts? No. You have forgotten the journal entry. Will you pass an entry in the books of account? Definitely yes. You have received the check of 3.5 lakh. Won't you deposit in your bank account? Or you will keep it in drawer only. After 3 months it will become a stale check. The moment you deposit in the bank, you will have an entry in the passbook, and if you don't pass the entry in your cash book, it will appear as part of your BRS. So definitely someday or other you have to pass an entry, So what will pass an entry? Bank account debit to discount received to P&L. Yes or no? So similarly, instead of money, if he had got the ticket and he decided that I don't want money, I need experience in my life. What money? What I'll do about the money? When I die, if I have a bank balance of 5 crores, what is the use of it? So before I die, I need to experience it. So he goes to Singapore along with his family and he comes back. So those tickets were received because of business relations, not personal relations. His father-in-law has not gifted him a honeymoon tour package. If that would have been the case, that would have been a personal transaction or a personal gift. Here it is a business transaction. So what entry will pass in his books of accounts? See why there is a problem, Because in accountancy, 11th standard, 12th standard, you are not focused on theory. Foundation, you are not focused on theory. Some of you ignored the chapter of theory and you came here. Before that also, I came across at least two instances wherein I thought that you did not refer to the theory. Theory chapter was totally ignored. What is the name of chapter? Accounting Concepts and Conventions. There was one concept called as monetary Only those things which are monetary in nature are recorded in books of accounts. Hey, if your stomach is paining, you can't pass an entry stomach account debit to pain account. Correct, na? So, moral of the story is everything, a money measurement concept you had. Money measurement concept that says that anything which is in monetary terms should be recorded in the books of accounts. Anything which is in non-monetary terms should not be recorded in the books of accounts. So he has received the tickets. Will he pass any entry in the books of accounts? No, because in accounts you had a money measurement concept. That useless concept we don't have in income tax. In income tax we think, have you earned the income? Oh, kind income is taxable or cash income is taxable? Which income is taxable? Both are taxable. Income earned in cash is also taxable. Income earned in kind is also taxable. Hey, basic concept chapter, na, when I was explaining you, na, I still remember 50% we are sleeping. In that, I explained you in the point of income that monetary income, cash income is taxable, kind income is also taxable. So, kind income as per accounts you don't record, na, because of money measurement concept. You have not recorded a particular income in your accounts. But in income tax that is taxable. So, that income, even though it is taxable under the head PGBP, it is not recorded. See, it is not a error of omission. It is not an error of omission. Rightly you have not recorded in accounts, but in income tax it is taxable. So this entry is not appearing in the credit side of profit and loss account. This is an example for what? Incomes not credited to profit and loss account but taxable under the head PGBP. What should we do while computing PGBP income? For this we should add, because it is taxable under that PGBP and it is not taken into account while making your profit and loss account. Have you understood that? So similarly, for every addition, for every subtraction, I have given an example. Understood? Every example I will not refer. I will go mad. Huh? 1 second. Huh? When you receive money, it is bank debit to discount received to PNL. You are receiving discount from your supplier, na? See, whether you write the entry of discount or whether you write the entry of commission or any other entry, ultimately your profit and loss account should be created. That's all. So, moral of the story is, for every addition and subtraction, I have given you the examples here. I do not have that much time to refer to each and every example. This is your homework. This point you should refer as part of homework. This is nothing but an example. So right here, homework. Kindly read it once. So have you understood this? Now let's move on to the last part. Last part of procedural aspects. Cash system, we finally discussed what? Statement, how to make the statement. Here also, how to make the statement of computation of business income. Starting point of solution will be what? Net profit as per profit and loss account. To that, two types of adjustment will be done. Adjustment relating to addition, adjustment relating to subtraction. Which are the adjustment relating to addition? You just make a statement. Expenses debited to profit and loss account, deduction not allowed or deduction allowed under other heads. This is the first statement. So here we will find out point 1, add expenses debited to profit and loss account but disallowed or allowed under other heads. Oi, are you understanding? What is the second adjustment relating to addition? Incomes not credited to profit and loss account taxable under the PGBP. So here I have written point number 2 relating to addition, taxable business income not credited to profit and loss account. Now we have two adjustments relating to subtraction. First in the expense keep on bench. No? Bench is given why keep the book here. जाओ क्या आगे? Shall I proceed? Now we are into what? Subtraction part, deduction part. So expenses. Hey, I'll forget yaar. Expenses not debited to profit and loss account, but deduction allowed while computing PGBP income. That should be deducted. So this is the third sentence. Is that very clear? So till now we have completed section 145, section 2 clause 13, section 2 clause 36. Procedural aspects also we have completed. The charging section, lot of theories involved. So do you want me to skip and discuss tomorrow? Tomorrow morning 7 o'clock? You have adequate sleep in the night, na? You have adequate sleep in the night, na? So you sleep for 6 hours, at least 6 hours? No. So morning when 7 o'clock you will come here, you sleep here? He says it. So should I discuss this tomorrow morning, first thing in the morning? So I am skipping section 28 right now. Now only should I discuss? Okay, morning you will doze off in the first section only, then second, third will be anyway. So let us take up right now. Let us take up right now. See, what should we actually do now? Every 30 minutes now, you should get up at that same place. You should get up and you should stretch your body. At the same place, you should get up and stretch your body. Let us start. Let's start, please. Please settle down fast. Section 28. Most of the places I would be taking one example. For every point I'll be taking one example. If at all you want to write, you can write that example in your own words there itself in notes. So whenever you just read the example, you will understand the point. Listen to me very carefully. We move on to the chapter of PGBP. Charging section is section 28. Generally, number 1 says what is chargeable to tax under that PGBP is profits and gains of any business or profession, whether it is textile business, oil and gas business, telecom business, whatever may be the nature of business, any business. What is taxable? Profit as well as gain is taxable. Profits and gains of any business or profession carried on by the SSE. Carried on by the SSE during the previous year. So from this sentence, page number 103, from this sentence, we can extract 3 conditions. Number 1, there must be business or profession. Number 2 condition, such business or profession should be carried on by the SSE. Number 3 condition, such business or profession should be carried on during the previous year. These 3 conditions can be extracted from section 28 clause 1. Now the point is, what is taxable or what is chargeable to tax? Profits and gains is chargeable. What do you mean by profits and gains? Not defined anywhere in the Income Tax Act, but the general meaning is profits and gains means revenue, incomes and gains minus the revenue, expenses and losses. So section 28 clause 1, when we say profits and gains, we don't mean to say capital expenditure or capital receipt. We are just talking about revenue, receipts and revenue expenses. Is that very clear? So what will be taxable, or how do we ascertain the profits and gains? It is nothing but revenue, incomes and gains minus revenue, expenses and losses. This is the way in which you get the amount of profits and gains of any business or profession. Now listen to me very carefully. At the beginning of the chapter only I told you that in this chapter there are variety of sections. There are certain sections focusing on income, there are certain sections focusing on expenses. In expenses also we have 2 varieties of sections. There are certain sections which are allowing you deduction. There are certain sections which are disallowing the deduction. Now listen to me very carefully. I am talking about an expense. For allowing the deduction for expense, we have the range of sections starting from section 30 to section 37. If your expense is not covered by that range, if in that range of section 30 to 37, if the expense is not covered, then still you can claim the deduction for that expense here in section 28 clause 1 in this term revenue expense. So this is the general provision. If you don't have any specific provision, you can come here. For example, if your expense is not covered by section 30 to 36, your expense is not covered by section 30 to 36, then you can go and claim deduction in section 37. In section 37, you don't have the list of expense, you have the list of conditions. If those conditions are fulfilled, you can claim deduction in section 37 subsection 1. Are you trying to understand what I am trying to explain? But section 37 subsection 1 is talking about an expense. In other words, it doesn't talk about the loss. It doesn't talk about the loss. And in the range of section 30 to 37, most of the sections are talking about the expense. None of the section is talking about the loss. So what if you have the revenue loss in the business? Can you claim the deduction? Yes, where your revenue, expenses and losses. So the word profits and gains means the revenue, incomes and gains minus revenue, expenses and losses. I mean to say that if at all for charging tax, you don't have any other section in the entire provision, set of provisions under that PGBP, then also that income can be taxed to you under that PGBP if it is of revenue nature. Where it will become taxable? Section 28 clause 1. So section 28 clause 1 simply says If you don't have any other section, na, I will catch you. If you are revenue in nature. So for charging tax also, section 28 will catch you, and for giving you deduction also, you can take the advantage of section 28 if you don't have any other section. Over a period of time, you will understand the importance of this. As of now, let us wind up this point. Now I am on to point number 2. For every point number 2, we are having 4 points, A, B, C, D. For every point, I am going to give an example. Listen to me very carefully. It will not be repeated. Any compensation or other payment due to or received by. What we are talking about? Compensation. We are talking about the compensation. Any compensation or other payment due to received by any person managing the whole or substantially whole of the affairs of the Indian company or any other company in India, and this compensation is received for what? Either for modification or for termination of the terms and conditions of such management contract. For example, Manoj is into liquor business. So he will never face recession. In India, if you are having a liquor business, no recession. Specifically in the state of Tamil Nadu. So he is into which business? Liquor business. He doesn't know anything about the airline industry. He doesn't know anything about the airline industry. So, but he wanted to be into the airline business. So what he did now, he acquired the existing business of some other airline industry, and he started his own airline business, Queenfisher Airlines. Queenfisher, not a. So he has started the airline business named Queenfisher Airlines. But he did not have any knowledge of airline industry business. He do not know how to run the airline business. He has acquired the airlines on his own brand. He has started Queenfisher Airlines. Now, for example, if a person is having a superb, excellent business acumen, then he will analyze whatever he is doing. So he analyzed and he came to know that I have acquired the airlines, I have started my own business in this field, but I do not know the intricacies of this business. So it is very difficult for me to manage, and if I don't manage in a proper manner, definitely I will be having losses. Now say for example, Ishwar is working in airline business since last more than 30 years. So he is a champion of airline business. Every smallest of the things he will be knowing. So Manoj, he started his own airlines, but he realized that it is not my cup of tea. But since I have acquired now, I will ensure that I will run this business and I will make profits. So he decided that since I am not the right person to manage this business, let me get some right person for me. So he tried to find out some correct person in the airline industry, and he came across Manoj. In some meeting or some gathering, he came across Manoj, and in that business meeting, he came to know that Manoj is from airline industry. He is working in airline industry since last more than 30 years. Sorry, Ishwar is working in airline industry for last more than 30 years. So Manoj decided that I will hire Ishwar, I will give him a contract, to manage my business. So Manoj has given which contract? Management contract to Ishwar. And for example, this contract is given for 5 years. And as per this contract, Manoj is going to pay 25 crores to Ishwar over a span of 5 years. So he has to manage the entire airline business, right from the smallest thing to the biggest thing, everything he has to take care of. For that, Fisher Airlines would be paying management fees to Ishwar at the rate of 5 crores per annum. And Fisher Airlines is into a international business as well as domestic business. Year number 1, see, do you believe that? Listen to me here. Do you believe that Manoj is dumb to give a contract for 25 crores only for 5 years? What will be his target later on? Once he has given a contract to Ishwar, what will be his target? Whenever Ishwar is operating the business or is taking some business decisions, Manoj will ensure that his own people are always around Ishwar to learn how to get the neck of this business. And the moment Manoj's people have got a grip over the business, then they'll throw Ishwar out of the system. Correct? Huh? So, Ishwar is managing the business. Year 1, he managed the business. Year 2 also he has managed the business. Year 3 also he has managed the business. 3 years, 5 crores he received. At the end of year number 3, Manoj's own people told Manoj that now we have a total grip over the business. Now even if we don't have Ishwar in the system, without him we can manage the business. So one fine day Manoj had meeting with Ishwar saying that we gave you contract for 5 years na. You worked excellently. You are having excellent experience. You can utilize your experience in some other place, in big companies. My company is too small for you. See how he talks. He says, my company is too small. Let my people only manage. Let us terminate the contract. So forget about remaining 2 years. You are a very experienced guy. You can go anywhere, you will get a good job. In fact, you can earn more than 5 crores. I do not know why you are here only for 5 crores per annum. You can earn more than that. So he sugar-coated talks and then he cancels the contract. So contract was for how many years? 3 years, but 5 years, but it terminated at the end of year number 3. So Ishwar will suffer a loss of 10 crores. For the next 2 years, he will lose 5 crores each for both the years. So Ishwar said to Manoj that no, this is not correct. If you want to terminate the contract, let this contract get completed and don't extend the contract. So Manoj did not accept this. Ishwar filed a case in the court of law saying that this contract is a contract of the copy of the contract and was made for 5 years. 3 years are over and he is cancelling the contract in between only. So I should be compensated for this because I am having a loss in my revenue. My future revenue has got affected. I should be compensated. So court has passed an order that yes, Fisher Airlines has to compensate Ishwar. So Ishwar is being compensated. 5 crores compensation is granted to him. This compensation is received for what? For termination of a management contract. This compensation will become taxable to Ishwar under the head PGBP. Have you understood that? Same example, I'll make only one change. For example, at the end of year number 3, Manoj told Ishwar that now domestic business my people will manage domestic business. You focus only on international business and your compensation of 5 crores will pay you now 3 crores because remaining 2 crores. My team will manage now, so I need to pay money to them also. So now onwards, for the next 2 years, instead of 5 crores, we'll be paying you how much? 3 crores. And you manage which business? Only international business. Don't focus on domestic business. So Ishwar says, no. This contract, you cannot change the terms and conditions in the middle of the contract. Let this contract get completed. If thereafter, at the end of year number 5, you want to change, you can. Right now, you can't. But Manoj did not agree to this and Manoj said, I'll pay only 3 crores. So Ishwar filed a case in the court of law saying that you cannot change the terms and conditions of the contract in between, because terms and conditions of the contract were fixed for a span of 5 years. So court passed an order saying that Manoj should compensate Ishwar. So he has received compensation for what? For change in the terms and conditions of a management contract. Terms and conditions of a management contract is changed, means he is receiving compensation for modification in the terms and conditions of a contract. Have you understood this? With this, point number A is over. Another example I will be taking for point number B. This time also there are two parts, modification as well as termination. I am not going to explain you once again what is termination, what is modification, same thing. But this time the contract is not a management contract, this time the contract is a agency contract. Agency contract. For example, there is a company called as Hindustan Unilever Limited. HUL has appointed me as an sole selling agent. Sole selling agent means single selling agent for the state of Maharashtra. Meaning thereby, whatever goods they manufacture, they will sell in the state of Maharashtra through me only. Goods will be manufactured, they will be given to me, and then using my distribution channels of wholesalers and retailers, I will ensure that the goods reaches the final consumer. For that, HUL is going to pay me commission. So there is an agency contract, I will be acting as a sole selling agent. Whatever value of goods I sell, I am going to get a commission on that. Say for example 5% of sales, and the contract is for say 5 years. At the end of year number 3, HUL says that we want to terminate the contract. They terminated the contract unilaterally, means without taking my consent. In that case, what I'll do? I'll file a case in the court of law against HUL, and if some compensation is granted to me, whatever compensation I receive from HUL will be taxable to me under that PGBP, and this compensation is for termination of a agency contract. Have you understood this? Same example with slight change. Instead of HUL terminating the contract, HUL said me that in the state of Maharashtra, in cities you are having a good network of wholesalers and retailers, but in remote part of Maharashtra, rural areas you don't have control. So in rural areas we are not getting business. You are not focusing on rural area, you are focusing only on cities. We want to penetrate every market in the state of Maharashtra. So do one thing, we entered into a contract for a span of 5 years. 3 years are over, that's all. You just focus on cities. Rural part we are going to appoint someone else. So because of this change, what is going to happen? My opportunity to earn more income will go away now, because my scope will be now restricted only to cities. So my revenue will be affected in future. So I will demand a compensation from HUL for what? For modifying the terms and conditions of a agency contract. If I get the compensation, that would be taxable to me under the PGBP under section 28. Is that very clear? Point number 3. Listen to me very carefully. This I'll take an example related to you, so very much easier for you to understand. For example, last time when I came to Chennai, I had taken a batch of 900 students. Out of 900 students, around 400 students were, or 400 or 500 students were from some other part of the country. Students from Andhra also come here, and students from some remote part of the Tamil Nadu also, from villages also, they come here to study. In other words, every chartered accountant student don't get proper coaching in their own place. That is the reason they come to cities. Government did the analysis of the situation, and government felt that why the child should come to city for education. He should get a good quality of education in his own place. But these coaching classes now, they will not start branch in a rural area because they say that it is not a profit making. In rural area, we'll set up a branch, we'll pay rent, our teachers will have to travel and we'll get 10-15 students, so it is a loss making batch. The government says, no, every student should get a coaching near to his place. To ensure that, government has decided that now onwards, no private institutes will provide any coaching to CA students. All these CA coaching institutes will be taken over by the government. In other words, they'll do nationalization of coaching business. Do you understand nationalization? Nationalization means government will take over the control over the private businesses. Private people will not be allowed to do that particular business. So government has decided to nationalize the CA coaching industry. Means all the private coaching institutes, they have to stop the coaching business for CA students. Now only Government of India will run the coaching centers, and Government of India will open the coaching centers even in the remotest part of the country, because their objective is to ensure that the child should get the education or chance to study near to his place. If this happens, don't you feel coaching classes are at loss? Coaching classes are at loss now, because they will not have a chance to get into this business anymore. They will have to stop this business. Their existing business will be taken over by the government. So this, all people who are into coaching business will lose their source of revenue. So all these coaching class owners along with their teachers will go on a hunger strike, saying that we will not allow this nationalization. Privatization is good because we will manage the business in a proper manner. If you nationalize this, then efficiency will go away. You will not have good quality of teachers. The situation will be like schools only, municipal schools, government schools, wherein they don't measure the performance of the teachers. Once they hire the teachers, they will be there for throughout their life. They cannot be fired. So the private coaching will become like a government school, wherein quality is of no importance. That is what they will say. But ultimately their business is going on. No? That is the reason they are shouting. So by hook or crook they wanted to continue in this business, but government has given a warning. These strikes, don't come on road. This is going to happen. This is decided, and this decision under any situation will not be reversed. Do whatever you want to do. This is done. The same is the situation in case of farmers' protest. So government has decided that we are not going to take this decision back. So now coaching classes owners have realized that this decision, now it is taken forever. It under any circumstances, it is not going to get reversed. So now coaching class owners now they will soften their stance. Now coaching class owners are saying that, oh, do one thing. Because of this decision, now we are losing business. So government should compensate us. If you want to nationalize the business, if you feel that by nationalizing efficiency will increase, students will have more facility, do that. But before that, compensate us. Now for example, government decides to compensate all the coaching class owners who are into CA coaching business. Then every class owner would receive some amount of compensation from the Government for what? Nationalization of business. And that compensation will be taxable under the head PGBP, point number 2, sub point C. Is that very, very clear? Last point. Compensation due to or received by any person by whatever name called in connection with termination or modification of terms and conditions of any contractor relating to business. What do you mean by any contract? Any contract other than above two contracts, means other than agency contract and other than management contract. For example, Tata Motors had a contract with MRF tires saying that in our factory every day 100 cars are being assembled, so we need how many tires? 400 tires. Every day you will supply 100 tires to us. Every day without fail you will supply 100 tires. The day on which you are unable to supply 100 tires, you will be penalized 25,000 rupees. Because we are dependent on you. If you don't supply the tires, our cars cannot be assembled. Our business will get affected. So if you want to enter into a contract with us, the terms will be what? Every day you will have to supply 100 tires. The day you don't supply, you pay us the compensation of 25,000. Now say for example, the business of Tata Motors has fallen by 50%. Business of Tata Motors has fallen by 50%. Will now they assemble that same number of cars? They will reduce the manufacturing activity, assembling activity. Now they say that we do not require 100 tires from you every day. Now you give us only 20 tires. So MRF says no, you can't change the terms and conditions. This contract was for 5 years span of time. Now if you change the terms, now you gave us the order of 100 tires every day, na? Because of you only, we heavily invested in plant and machinery. We purchased plant and machinery worth crores based on you. You wanted 100 tires every day. So for manufacturing 100 tires, we invested heavily into plant and machinery. Now you are saying that you want only 20 tires. That is not acceptable. So if you want to terminate the contract or change the terms and conditions of the contract, you have to compensate us. So now Tata Motors is compensating MRF tires. So the amount of compensation received by MRF tires is for modification or termination of any business contract other than agency contract, other than management contract. It was a supply of goods contract. So whatever compensation is received is taxable to them under the head PGBP. Point number 3. Income derived by whom? Income derived by trade, professional or similar association from specific services rendered by them to their own members. For example, in Mumbai we have one society called as Bombay Chartered Accountants Society. So all those people who are chartered accountants can become member there, not mandatory. They can become a member of Bombay Chartered Accountants Society by paying fees to them. And Bombay Chartered Accountants Society is publishing a monthly magazine. The objective of the society is to ensure that all its members, their knowledge should be updated. So they will publish a magazine every month. In that magazine, few pages are devoted to domestic tax laws, few pages are devoted to international taxation, few pages are devoted to say Companies Act, few pages are devoted to Foreign Exchange Management Act, etc., etc. So their basic objective is to upgrade the knowledge of the members. Now say for example, some new law has come, say for example GST. GST has come. Every person do not have that much time to pick up the act, read, understand. Every person do not have that much amount of time. So what Bombay Chartered Accountants Society has done, Bombay Chartered Accountants Society has come out with a comprehensive course on GST of 15 continuous days, 8 hours a day. 8 hours a day. They have come out with a comprehensive course on GST. If you want to join a course, you have to pay a fees of say 15,000 rupees. You have to pay fees of 15,000. So say for example, there will be a lot of chartered accountants also interested into this now, because new law has come. They don't have time to study the entire GST Act. So what they will do, in a less span of time, if they want to learn a lot of things, then instead of picking up the book and studying, they would prefer going to seminar and attend the seminar. So Bombay Chartered Accountants Society has scheduled a seminar on GST for 15 continuous days. It is a comprehensive seminar wherein lot of speakers who are having knowledge in the field of GST would be appointed as a counselor or a guide or a teacher, whatever you call it as. And every participant will have to pay a fees of 15,000. Now say for example, 100 people participated in this. So Bombay Chartered Accountants Society will charge 15,000 to everyone, and from 100 participants they have got an amount of 15 lakh rupees. Now what they will do, in their place, in their hall, they will arrange the seminar for 15 days. For every day they will give the schedule in advance, that first date, first 4 hours GST, this topic will be taken by this speaker. So for every day they have arranged 3 different speakers. So for 15 days, 45 speakers, and they will have to pay money to each one of them. So Bombay Chartered Accountants Society is arranging a seminar. They are charging money from participants. They are paying money to the speakers. They are providing the notes, handouts to the participants, and by doing that entire exercise, they have earned an amount of 40,000 rupees as surplus. So they collected 4 lakhs. They collected how much? 15 lakhs. They spent how much? 11 lakhs. So what is their profit element? 4 lakhs. Will that become taxable to them? Answer is yes. Where? Under the head PGBP. What is that? Income derived by which association? Professional association. Income derived by professional association from specific services rendered to its own members. Have you understood this? Oh, say yes or no. Point number 4, I would prefer to postpone the discussion of point number 4. It requires huge application of mind. I don't think that you are in a position to do that today. So this point intentionally I would skip right now. Tomorrow when we start, we will be starting with this point number 4. Point 5 already discussed. Oi, point 5 already discussed. What is that point 5? Can you refer and recollect when I discussed this point? Benefit, salary chapter I have not covered. Foreign tour, Singapore tour, that was nothing but a benefit or perquisite arising out of business or profession. Yes or no? No, salary we have perquisites, but I am not taught that chapter now, so how can I ask? Understood. But those people who are learning income tax for the first time, they may not know what is the word perquisite also. Anyway, have you understood? So that example of LG 4 days 3 nights Singapore package is nothing but what? Benefits or perquisites arising out of business or profession. All the cricketers, any cricketer who has been awarded a man of the match award or a man of the series award, and he has got a car or something else, that would become taxable to him under that PGBP, considering it as benefits or perquisites arising out of business or profession. That answer is given in section 5. Scope of total income. If you are ordinary resident, your global income is taxable in India. Yes or no? Shall I proceed? As and when we approach towards the end of this session, you should be more You should be sitting more straight. So which point we completed right now? Point number 5. Very good. Point number 6. In 12th standard, you had a chapter of partnership final accounts. In partnership final accounts, you had an adjustment, salary paid to partner. So there are a lot of benefits which are given by the partnership firm to the partner, like salary to partner, bonus to partner, commission to partner, remuneration to partner, interest on capital account balance, interest on current account balance, etc., etc. Now my question is, do you believe that partner is an employee of the firm? Partner is not an employee. Partner is a part owner in the business. Therefore, whatever benefit he has received from the partnership firm, even though you name it as salary, it is not salary. Are you understanding? If you are doing a job at the end of the month, you are going to get a salary. But when a partnership firm pays salary to the partner, don't consider that it is a salary and it will be taxed under that income from salary, because partner is not an employee of the firm. He is a part owner in the business of the firm. So when an individual became a partner in the partnership firm, his intention was not to do a job and earn the income. His intention was to do a business and earn the profits. So whatever salary, bonus, commission, remuneration, interest, anything received by the partner from the firm would be taxable to the partner under that PGBP. It would not be taxable to him under that salaries. Are you understanding? So this point number 6 is over. Point number 7 we will discuss when we will move on to the chapter of capital gains. If you want to write, you can write into the bracket capital gain, into the bracket you can write intangible assets. So when we discuss the topic capital gain on transfer of intangible assets, we will discuss this. Point number 8 we will be discussing in IFOS. Point number 8 will be discussed in IFOS. Point number 9 once again it will be discussed in the chapter of capital gain. Point number 10 will be discussed in the chapter of PGBP when we move on to section 35 AD. PGBP only, but when we move on to section 35 AD. So for the time being, we can say that section 28 is over. Only one point is left, that is point 4, that I will be taking up tomorrow. Speculation business. This I will not discuss at all. I will discuss when I move on to the chapter of set off and carry forward of losses. See what is speculation business, what is called as speculation, what is not called as speculation is not given more importance at CA intermediate level. So there is no point in discussing everything in detail, but yes, this is relevant when it comes to set off. So we will discuss in the chapter of set off only. So this will be discussed in the chapter of set off and carry forward of losses. Section 29 will get completed in maximum 1 minute, maximum. Section 29 just says that, listen to me, section 29 just says that if you want to compute income from business profession, for that you will be required to read section 30 to section 43D. Section is over. So section 29 is acting as a guide. See, if you have the address, you have to reach a particular location, you have the address, but you don't know the path. So you will ask that path to someone, where is this? How should I go? So this is what is section 29. You ask a section 29, I want to compute PGBP income. Section 29 says, go to section 30 to section 43D. Read that, you will understand. So section 29 is over. Now, at the beginning of the chapter, I had explained you that sections in this chapter are bifurcated broadly into three categories: sections relating to income, sections relating to expenses, and other sections. Sections relating to expenses are further divided into two categories: sections which are allowing you deduction for the expense, and sections which are disallowing you deduction for the expense. Do you recollect? No. Sections which are allowing you deduction relating to expenses, they are from what to what? Which number to which number? Section 30 to section 38. Correct? From that section 30 to 38, we have discussed how many sections? Only one section. Which one is that? Section 32, depreciation. So now we actually move on to this range of section starting from section 30 ending at section 38. Now section 32 was one of the very big section in this range. Similarly, we have one more section which is comparatively bigger in size, and that is section 35 AD. That is section 35 AD. I would definitely want you to read that section 35 AD as part of homework. We will definitely discuss in the classroom only. But beforehand, if you come read and come na, it will be simpler for me. My life will be more simpler, and definitely your life also as a consequence of that. Section 35 AD, where it is? One. Yes. Section 35D. See, when you read the section, you will understand what it says. But what you won't understand is why it says so. So what we will be discussing in the classroom is why such section is made. What is the objective of the government behind making such a section? That reasoning part we will discuss in the classroom. Otherwise, it is not difficult. It is easy to understand. So this I am giving you as part of homework today. I do not know whether you are reading at home or not. Now let's move on to small sections. Oh, rates of depreciation, you referred na? So quickly we'll go through the rates of depreciation first of all. So that depreciation section 32 is entirely gone. Building the rates of depreciation, I have already discussed with you yesterday. Furniture and fittings, favorite rate of depreciation 10%. So furniture and fittings would include electrical fittings also. Electrical fittings means electrical wiring, switches, sockets, other fittings, fans, etc. So all this will form part of furniture and fittings, whose rate of depreciation would be 10%. Then lastly we have intangibles. Intangibles. Do you recollect? While I explained you how to make the blocks, I had explained you that there are 6 defined class of asset, rest are undefined class. So know-how, patent, copyright, trademark, license, franchisee, any other business or commercial rate of similar nature, 25% is the rate of depreciation for each one of them. And now we move on to the last part, that is depreciation for plant and machinery. You know that plant as well as machinery are two different assets when it comes to income tax. It is not plant and machinery, it is plant comma machinery. Now listen to me very carefully. Question 1, you may ask whether I need to remember the rates of depreciation. Answer is yes. Yes, yes. Question, it may give, it may not give. I have seen certain questions in the from the past papers, they did not provide the rate of depreciation. Hey, this year also Are you aware that CA Institute has come out with a MCQ booklet? CA Institute, 30% marks are devoted to MCQs, na? Please listen to me, yaar. Hey, don't talk between yourselves. Listen to me. 30% marks are devoted to MCQs. Till now, what used to happen is CA Institute never allowed you to take away the question copy of the MCQs. Like in the examination, you have to return the question also back to the CA Institute. MCQ questions are not published by the ICI because ICI was having the shortage of MCQs. If they give the question paper to you, then they will not have a chance to ask the same question in the next examination. That is the reason they were not allowing you to take the question paper back. So, since last around more than 1.5 years, ICI is sending the emails to all the chartered accountants, all the members, kindly make MCQs and give it to us. We will pay you 800 rupees per MCQ. Oh, per MCQ means that not small MCQ, one of 3-4 lines. Big MCQ case study type wherein there will be 3-4 paragraphs and then you will be having 3-4 MCQs. Such type of case study type MCQs. You have to make, life is not simple, please don't. Otherwise you will say that I will make MCQs, forget about the exam. You have to make the MCQ, you have to make case study type MCQ, you have to submit it to CA Institute. Then they will see whether this is up to the mark or not, quality is excellent or not. Then they will decide whether we should select this or not. If at all they select, then only they will pay you money. Otherwise, it is waste of time. They started with 1500 rupees. For MCQs, they started with, but coaching class teachers are not allowed to participate. Only practicing members. But I have seen coaching class teachers also making the MCQs and they will give it to their friend and through their friend they will submit to ICI. This happens. So they started with 1500, then they made it I think 1000 rupees or so. Now they are having the proper question bank of MCQs. That is the reason recently they have come out with MCQ booklet for CA intermediate as well as CA final separately. In your CA intermediate MCQ booklet, recently released in the month of January 21. Are you aware about this? January 21, they have released MCQs. CA intermediate, they have released 125 MCQs. Out of those 125 MCQs, 100 are small MCQs and 25 are case study type MCQs, case study scenarios. So in CA final, I'm not talking about CA inter, I'm talking about CA final. CA final, they have made MCQs on the rates of depreciation without giving the rate in the question. So moral of the story is you have to remember the rates. Now please. 50% you can remember now. Out of this, even you remember 50%, that is okay. See, if you analyze, wherever it is 40% na, you need not remember this. You remember all rates other than 40. You remember other than 40, remaining is 40. Okay, let me read very quickly. Oil well. You understand now? Oil well? Depreciation rate 15%. 0.6 windmill and any specifically designed devices which run on windmill if they are installed on or before 31st March 14 and special devices including electric generators and pumps running on such windmill, they are also installed on or before 31st March 14. The rate of depreciation is 15%. Same thing installed on or after 1st April 14, depreciation rate is increased to 40%. Earlier old rate of depreciation is 15, new is 4040. Right now, which one would be the valid? Both. It all depends upon the date of acquisition. It all depends upon the date of acquisition. If the examiner correct installation, if the examiner gives you the date of installation of machine related to windmill and the date of installation is up to 31st March 14, you have to apply the rate of depreciation of 15%. After that, you have to apply 40%. Next, very important. See, on this point number 8 and 9, they had made the MCQ in CA final booklet. They have made the MCQ on point number 8 and 9. Motor cars other than those used in the business of running them on hire. If you don't read the words other than, the meaning will change. Motor cars other than those which are used in the business of running them on hire. See, if they are used in the business of running them on hire, they will not be called as motor cars, they will be called as motor taxis. So there is a difference between a car and a taxi, na? So if you run in the business of hiring business, na? Ola, Uber, all they are into a hiring business. So if they don't have their own cars, but if at all they have their own cars, their car would get a higher depreciation. If you are a practicing chartered accountant, for your office use, you have purchased a car. That car is not used in the business of running them on hire. That car will have a separate rate of depreciation. Usage is low, lower rate of depreciation. Usage is more, higher rate of depreciation. So if the motor car is used other than in the business of running them on hire, then the depreciation rate is 15%. And if it is used in the business of running them on hire, if you use the vehicle in the business of running them on hire, it will not be called as a motor car, it will be called as motor taxis. Motor buses, motor lorries. Motor buses, motor lorries cannot be used for residence, for family traveling. Understand? Motor buses, motor lorries. If you have such a big family, then yes. Motor buses, motor taxis, motor lorries used in the business of running them on hire. Transportation business basically, then usage of those vehicles is more, therefore the rate of depreciation is double the normal rate, which is 30%. Now, very important part we need to look at. In that note, it says that in case the motor car is used other than in the business of running them on hire, but that motor car was acquired between 23rd August 2019 to 31st March 2020, then the rate of depreciation would be higher by 15%. The actual rate of depreciation was 15, they will increase by 15, so they'll make it 30. If you are into the business of running them on hire, then anyway your rate of depreciation is 30. If you acquire between 23rd August 19 up to 30th March 20, then instead of 30, they will increase by 15, so they'll make it 45. Why so? That question may arise in our mind, na? Now listen to me carefully. Why the rate of depreciation is higher if the vehicle is acquired during the period 23rd August 2019 to 31st March 2020? If you have the habit of reading the newspapers and going through the news channels, around 2018-19, all the automobile sector was going through a very bad phase. In fact, there were news every now and then, every week there was a news saying that Tata Motors has shut down the factory for 7 days. Means once in a month, 1 week in a month, they will not run the factory. Means production will be zero for 7 days, because anyway lot of automobiles were assembled and they were sent to the dealers and they were not getting sold. So there is no point in making more cars. So they used to stop the production for 7 days. Few companies stop the production for 10 days, 12 days in a month. and most of the employees who are workers working in this motor car assembling unit, they are on a contractual basis. So few companies paid them salary, few companies did not pay. So automobile industry was going through a very bad phase. So they went to the government of India and they said that now if you don't support us, anyway there are a lot of small companies who are into auto ancillary business, means they are making spare parts of vehicles, etc. Such kind of small companies, they have already liquidated because of this bad phase in the business. So now if you don't support us, then big companies will also start getting liquidated. There will be a huge unemployment. Therefore government came out with an idea. This is not the first time they have come out with such idea. Such kind of thing they have already implemented in the past also many times. So government came out with an idea that let us increase the rate of depreciation. What if government increases the rate of depreciation? It is like a Diwali offer which is valid only for a period of 5-6 months. But if you take the advantage, throughout the life of an asset, you will get higher depreciation. So motor car acquired between those dates, you will have to make a separate block because those motor cars will be having a higher rate of depreciation. So if you get more depreciation, you know that if you acquire motor car between these dates, you are going to get more depreciation. So if you were planning to acquire the motor car, instead of planning, you would act. So you would go and purchase the motor car. On the other hand, if you are into a transportation of goods or transportation of passengers business, and in your business there are a lot of old vehicles, you wanted to replace them with a new vehicle, but you were not doing that because of, say for example, funds, etc., whatever may be the reason. But if you come across such a point when government says if you replace up to this date, then we are going to give you extra depreciation, then those people who are into transportation business, either they will acquire new vehicles or they may replace the existing vehicles with the new ones, as a result of which there will be a demand for the vehicles, and those automobile sector which was facing a very difficult phase will have a demand, and then everything will be normal. So the intention was to revive the automobile industry. Therefore government came out with that specific provision. Ocean going ship, speedboats operating a inland. Do you understand speedboat? Speedboat, only one person can ride that boat. Jet ski, or it is called, I don't know what it is called. Yes. Okay, so that speedboat, every boat rate of depreciation remains the same, that is 20% rate of depreciation. Vessels other than speedboats ordinarily used for inland water, 20% is the rate of depreciation. Molds used in rubber and plastic goods factory. Do you understand mold? Molds are used for giving a particular shape to anything, to a plastic, or to, say for example, they make Ganpati so they don't make it by sticking the mud with their hands. Nowadays there are molds only, so you paste that mud on that mold and you remove the mold, it will have a particular shape. So plastic goods factories and rubber goods factories, if they are using the mold, on that they will have a depreciation of 30%. Plant and machinery used in semiconductor industry covering all integrated circuits, 30% depreciation. Do you understand integrated circuits? Your laptop, your mobile phones, every electronic product will have a circuit inside the instrument. That motherboard inside the CPU is nothing but a circuit. In mobile also you have similar circuits now. So if someone is into this business, they are manufacturing circuits, then on that plant and machinery which is used for manufacturing circuits, they will have 30% rate of depreciation. Aeroplane will have 40%. Ship is 20%, of that double is aeroplane depreciation, 40%. Specific air pollution control equipment, water pollution control equipment, solid waste management equipment, solid waste recycling and resource recovery systems. All these waste management machines will have a depreciation rate of 40%. Earlier, just 3-4 years back, these assets were having a rate of depreciation of 100%. 100%. Just before 4 years, government has reduced the rate of depreciation from 100% to 40%. Actually, it is just reading, I do not know. Energy saving devices, 40%. Are you aware about something? I don't remember. Nowadays, people don't use. There was one small machine which people used to buy, very small machine like, and they used to plug in that socket. If you put that machine in the plug, then they were believing that the power consumption would be less. Have you seen such kind of machine? Not stabilizer. Not stabilizer. I do not know whether this is fact or not, whether actually they used to function or not, but there was a very small machine, but you just plug it and switch on the button. If you keep it on, then the power consumption will be less. So such kind of machines were developed a few years back. Now they are not available in the market. I do not know why. Maybe there was no such thing and just it was manufactured and sold in the market. But those were energy saving devices. Those were called as what? Energy saving devices. So you'll have what rate of depreciation? 40%. Computer, including computer software. Earlier, 3 years back, 4 years back, we had a depreciation rate of 60%. Now it is reduced to 40%. Books owned by a professional. A lawyer, if you visit the office of an experienced lawyer, inside his office you will have a books. Everywhere on a wall you will have a cupboard. In the cupboard you will be having a books. So all those books are fixed asset for him, and he'll get a depreciation of 40%. Point 18. Books owned by SSC carrying on the business of lending libraries, 40% depreciation. Life saving medical equipment. Medical equipment, not medicine. Ventilators, oxygen devices, ventilators, etc. Those are life saving medical equipments. Rate of depreciation will be 40%. Last point, general rate of depreciation means if your plant is not covered by point number 5 to point number 19, then you apply the general rate of depreciation on plant, that is 15%. So we have just referred to the rates of depreciation. Now we move on to small sections. Small sections. Hey, you took a break, na? Actually, this Sunday onwards, we were planning to have an online session only. So face-to-face classes will stop for a few days. Because government has clearly given the instructions, state government, there is a notification that you can't run the online coaching classes. So please don't talk between yourselves. What we are planning is, for 3-4 days, we will not have face-to-face class. 3-4 days, we will have only online class. Maybe we will develop some mechanism wherein in online class, see, I am habituated to take the class even without looking at the face of a student. Mumbai lectures, I take in Zoom app. In Zoom app, I don't on my videos. Students they also don't on their videos. They just communicate with me through the chat box and they understand everything. I am taking a batch of 110 students. I have not received anything from any of the students that we are not understanding. So for me, it is not a new thing that without looking at the face of the student, I can't explain, I can explain, and student can also understand. It is just a mental block saying that if you don't look at the video of a faculty, will not understand. So in these 5 days, we are going to make you realize that even if there is no faculty in front of you, just listening to the voice, you can understand a thing in the same manner, provided there is a chat box wherein you can drop the message. So what we are planning is, listen to me, yeah, listen to me. So I was having a conversation with Tarun sir that we need to conduct a few sessions, 4-5 days, only online sessions. So we'll have a screen here, there'll be a chat box, and if you don't understand anything, at the same time spontaneously you can drop a message. I'll always have a eye on the communication, and if you don't understand, not understood, I'll re-explain that point by taking one more example or so. If that screen is not arranged, for example, if that happens, if the screen is not arranged, then that WhatsApp group is already created, na? So each one of you are there in that WhatsApp group. I'll just ensure that there is no other teacher in the WhatsApp group, because you start dropping the messages. If I take a session of 2 hours, my experience is, if I take an online session of 2 hours, in 2 hours, in a batch of 110 students, I have at least 2000 messages. 2000 messages. So, if something doesn't work out, then we can have an online session at the same time. Listen to me. Please, please, please. If something doesn't work out, then we'll have a communication through the WhatsApp and online session will be taken. If you don't understand anything, you should just drop a message. And I'm just telling you because once we start, you should know that what you are supposed to do. At the completion of every concept, I would be asking you, have you understood? So you have to say yes, no, whatever you want to say. But you have to message. Everyone has to message. The batch is of around 47 students. If I take a session of 3 hours, then I should have at least 3,000 to 4,000 messages. So every 10 minutes you have to say yes or no, na? Because very frequently I will be asking you, have you understood this paragraph? So you should type yes. So that would be the level of interaction which will be required to understand the topics in a entire 100% online mode. So we move on to first batch of the sections, section 30 to 38. In that section 30 to 38, now please, whenever we start this online session, before that, please don't talk. Before that, when you sit for an online session, first of all, see, you need to be in acceptance mode. You need to be in an acceptance mode. If you are having a block in your mind saying that how I will understand online session, I can't see the faculty, I don't see his face, I just see the content, I'm just getting the voice, how I will understand. So this is not new, this might be new for you. It will remain new only for a day's time, next day onwards, or maybe few people will get adjusted in a span of 30-40 minutes only. So when you sit for these lectures, you should not have any block in your mind. You should be in an acceptance mode, saying that this is the situation, and we need to accept that this is the situation. In that situation, we need to find out our path, and we need to ensure that the syllabus goes on. So what is the range of section expenses allowed as deduction? What is the range of section? What is the range of section for allowing deduction for expenses? Section 30 to 38. Section 30 to 38, out of that we have done how many sections? Only one section. What is that? Section 3 to 32, depreciation. We also did one more section, 32 AD, additional investment allowance, but not that important from the examination point of view because that is already expired. So now we move on to the first section in that range, small sections, it will get completed in a short span of time. So if you don't focus, you look here, one section is gone. Section 30. First section is let me complete two sections. Oh, 1 second. Huh? I'll tell you the time. Right now it is how much? 12:38. 12:38 as per my watch. Two sections I am going to complete in 4 minutes. Two sections, 4 minutes. Sharp. No repetition and don't disturb. Just focus. Keep a timer if you want. 4 minutes, two sections. First one is section 30. Section 30 is an exhaustive section, meaning thereby only those expenditure which are covered by this section are allowed as deduction. The section is expense relating to building. Whatever expenditure you incur in connection with building, that expenditure can be allowed as deduction in section 3030. In your business, if you are occupying the building as a owner, if you are the owner of the building, then you can claim deduction for 3 expenditure. Number 1 is current repairs. In income tax, we use the word current repairs. In accountancy, you are using the word revenue repairs. So any repairs on the building which is of revenue nature will be called as a current repairs that can be claimed as deduction in section 3030. Point 2. All the taxes relating to building, like there is a tax called as land revenue on a plot of land. There is a municipal tax called municipal tax, which is the tax on a structure. If you construct a structure on a land, then on that structure you have to pay municipal tax. Land revenue is collected by the state government, municipal tax is collected by the municipal corporation, and both these can be claimed as deduction while computing your business income. So number 1, current repairs, revenue repairs. Number 2, rates and taxes. And number 3, if you have taken the insurance of the building, you pay the insurance premium, that will also be allowed as deduction. So if you are using the building in your business as a owner, you can claim deduction for 3 expenditure. Number 1, current repairs. Number 2, rates and taxes. Number 3, insurance. But if you are using the building, using the building in the business as a tenant, you have taken some building from someone as a tenant, you are using that building in your business, then instead of 3 expenditure, you can claim deduction for 4 expenditure. The 4th one is what? Rent. So rent, current repairs, taxes, insurance, you can claim it as deduction provided you have incurred it. Correct? Now, very important point. This expenditure can be claimed as deduction provided that building is used for the purpose of business profession. So personal buildings in which you are residing, your own house, if you incur some repair costs, etc., those things cannot be claimed as deduction. Last point with respect to section 30, if I am a proprietor, in accountancy, I consider myself as a separate entity. My business is considered as a separate entity because in accounts we have something called as concept of entity. So if I'm having my own premises, I have let out that premises to my business and my business is paying rent to me. Such kind of arrangement can happen in accountancy, not in income tax, because in income tax, proprietor and business of proprietor, they are one and the same. So if business is paying rent to proprietor, that is a fictitious transaction. If business is paying rent to proprietor, it is expense for the same person, income for the same person. Such kind of notional expenses, such kind of fictitious expenses cannot be claimed as deduction while computing business income. With this, section 30 is over. Section 31, expense relating to machinery, plant and furniture. How many expense you can claim as deduction? Only 2 expense. Number 1, current repairs. Number 2, insurance premium. In section 30 as well as 31, you might have observed that only revenue expenditure can be claimed as deduction. Capital expenditure cannot be claimed as deduction. Capital expenditure, if you incur, you have to capitalize and you claim depreciation on that in section 32. besides all plant, machinery, furniture used for your personal purpose cannot be claimed as deduction. If you are using plant, machinery, furniture for personal purpose, all the expenditure relating to those plant, machinery, furniture cannot be claimed as deduction. Is that very clear? Now, before we have a small break, one sentence, section 30 and section 31 is an exhaustive section. Exhaustive section means you can claim deduction only for those expenses which are specifically covered by section, which are specifically written in the section. Any expenditure which is not written in the section cannot be claimed as deduction. Section 30 gives you reference for how many expenses? 4. Section 31 gives you reference to only two expenses. Is that very clear? So with this we have completed section 30 and 31. So section 30 as well as section 31 both we have completed. Now we move on to sections pertaining to deduction allowed. The range is from section 30 to section 38. For the time being, I move on to the last section in the range, and that is section 38. Section 38 says what? Listen to me carefully. Section 38 says that if you are having any building or plant or machinery or furniture, in other words, if you are having any asset which is not exclusively used for business or profession. In other words, sometimes that asset is used for personal purpose, sometimes it is used for business or profession purpose. In that case, while computing income from business profession, we will give you deduction of expenses pertaining to those assets only to the extent for which they are used for the purpose of business or profession. In other words, the extent to which those assets are used for personal purpose, to that extent proportionate expenses will be disallowed. They will not be allowed to as deduction. That is what is written in section 38. So if you are having a common building, ground floor you are doing business, first floor you are residing, then all the expenses relating to that building, whether it is repairs, whether it is municipal tax, rates and taxes, whether it is insurance premium, everything is required to be bifurcated in the ratio of square feet. And the extent to which the building is used for the purpose of business profession, proportionally expenses should be allowed as deduction, and the extent to which that building is used for personal purpose, proportionately those expenses should be disallowed. Is that very clear? So section 38 is applicable in every case. It is applicable even in case of section 32 depreciation. So if you are having a motor car, if you are having a car, part of the time it is used for business or profession and part of the time it is used for personal purpose, then whatever expenses are relating to car like fuel cost, repairs and maintenance cost, driver salary, as well as the depreciation of the car, everything will be required to be bifurcated into two parts: business profession purpose and personal purpose. The extent of personal purpose will not be allowed as deduction. So where any building, plant, machinery or furniture is not exclusively used for the purpose of business or profession, the deduction on account of expenses on account of repairs, maintenance, rent, rate and taxes, depreciation in respect of these assets shall be restricted. Deduction will be restricted to a fair, proportionate or part thereof, which assessing officer may determine. Yesterday we had an argument saying that how the officer would come to know, na? The power is given to officer only to decide. You have to prove. If you are unable to prove, officer will decide. Whatever he decides, you have to accept. You don't have any other option. But he will decide only if you are unable to prove. Assessing officer may determine having regard to the use of asset for the purpose of business or profession. In simple language, common asset used in business as well as for personal purpose the extent to which it is used for personal purpose, to that extent all expenses will be disallowed on a proportionate basis. Yes. So with this, section 38 is also over. Section 30, section 31, section 38, section 32 is over. Now, before we get into a very big section, let us today our target is to cover up small sections. So I am directly moving on to section 37 subsection 1. Which section? Section 37 subsection 1. Do you know what is your homework today? Last bench, what is homework? 35D, very good. See, if you remember, that is okay. If you don't remember, you buy the marker, permanent marker, na? 25 rupees only, very cheap. So just buy the permanent marker. The moment I give you homework, you write somewhere on your body. Section 37 subsection 1. Section 37 subsection 1 talks about general deduction. It talks about what? General deduction. Please don't talk. Which section we are moving on to? Ishwar, focus here, otherwise Ishwar will not support you. God help those who help themselves. See, if the person sitting next to you is not focusing, na, you should be happy, because you know that he will fail and you had a target of passing. Yes or no? Person sitting next to you, na, if he is misbehaving or is not focusing, don't make him serious. Let him be the way he is. You just focus on your studies. Shall I proceed? Okay. We move on to which section? Section 37 subsection 1. Listen to me very carefully. That section is given in your book on which page? 133. 133. Okay. Now listen to me. Which sections we have done till now? You move on to page 133. Just for the purpose of formality, you keep that page in front of you, so that if I ask you somewhere in the middle which section is going on, you should know. Correct? Section 30 we have completed. Section 30, expense relating to building, is over. Section 31 also we have done, expense relating to plant, machinery, furniture. We also did section 32, depreciation. And then we also did section 38, plant, machinery, furniture, building not exclusively used for the purpose of business or profession. Besides this also we are having a lot of sections. We have range of sections, right from section 33, 35. In 35 we have numerous sections. In 36 also we have numerous sections. Skipping all those right now, I am directly moving on to section 37 subsection 1. See, government started making sections. Government started from section 30 until the time government reached section 36. Government realized that it is nearly impossible to make a section for each and every expense, because there are thousands of different businesses. Every business, the nature of every business is different. The nature of expenses in each business is different. So as for us, it would be practically impossible to cover all the expenses and make separate section for allowing deduction. If we try to do that, those section numbers would turn out to be into hundreds. Therefore, government, once they reach section 36, they made section 37 subsection 1 as a general section. So this section is called as section for general deduction. In section 37 subsection 1, Government has not given you the list of expenses for which deduction will be allowed. Government has not given you the list of expenses for which deduction is allowed. Government has given you certain conditions. If those conditions are fulfilled, then you can claim deduction for any expense. In which section? 37 subsection 1. The first condition is that expense should not be covered by section 30 to section 36. It should not be covered by section 30 to 36. If a particular expense is covered by section 30 to 36, you can't get into section 37(1) to claim the deduction, because there is a principle of interpretation in law which says that specific rule will prevail over the general rule. Specific rule will prevail over the general rule, meaning thereby specific rule should be given more importance. It should be given a priority over the general rule. For example, if you want to claim deduction for repairs of the building, you can't get into section 37(1). Entry is not allowed because already we have section 30. You go in section 30 and claim the deduction. So first condition in section 37 subsection 1 says, if you want to claim deduction, then your expenditure should not be covered by section 30 to section 36. Is that very clear? Second condition says that in section 37 subsection 1, we will give you deduction for the expense provided it is a revenue expenditure. Provided it is a revenue expenditure. In other words, capital expenditure cannot be claimed as deduction. For whatever capital expenditure you have incurred, you can't claim it as deduction. What you have to do? You have to capitalize and you claim deduction in the form of depreciation. So directly entire cost of an asset you can't claim as deduction. So this is the second condition. Third condition says the expenditure should be related to your business. If it is related to your business, we say it is a business expenditure, deduction is allowed. But if it is a personal expenditure, you can't claim deduction. So personal expenditure cannot be claimed as deduction. All these conditions are cumulative in nature. In other words, all conditions are required to be fulfilled. Certain conditions are part of the section and certain conditions are given in the form of explanation to the section. I am covering everything right now and then we'll move on to the section and refer to the provision. First condition says what? Your expenditure should not be covered by section 30 to 36. If it is covered by section 30 to 36, go there and claim the deduction. Second condition says that it should be in the nature of a revenue expenditure. If it is a capital expenditure, you can't claim deduction for the entire cost, capitalize and claim the depreciation. Third condition says the expenditure should be exclusively incurred for the purpose of business profession. So if it is a business expenditure, you can claim deduction. If it is a personal expenditure, you can't claim deduction. For a very long span of time, we had only three conditions here in section 37 subsection 1. But around late 1990s, there were a lot of cases wherein deduction was claimed for certain expenses. There was a fight between the department and the SSC saying that whether deduction will be allowed for a particular expense in section 37 subsection 1 or not. In those cases, decision was given in favor of the SSC and government did not like the interpretation of the court while giving the decision. So government came out with a retrospective amendment. So which were those points? I will try to explain you. For example, there is one company called as Steel Authority of India Limited. Steel Authority of India Limited. It is a government company. It is importing steel. So when steel comes, when you import the steel, delivery will not come through the aircraft. It will be too costly. Delivery will come through the ship, very big ship. So Steel Authority of India Limited, whenever they import on a regular basis, they import the steel. So their ship would arrive and steel is required to be unloaded from the ship. But in India, the problem is the way we have traffic on the roads, similarly we also have a traffic at the seashore. So near the seashore, we will be having a lot of ships and you have a very less space. So there will be a queue of the ship waiting to unload the goods. So say for example, Steel Authority of India ship, they have imported the steel and the ship has arrived. I can see that ship is standing there, but it will take at least 2 days time for the other ships to unload the goods and move away so that that ship can come forward and unload the goods. But Steel Authority of India Limited, they have committed some dates to their customers saying that on this date we will deliver the steel to you. So Steel Authority of India Limited knew that this steel from the ship will not be unloaded in a span of 2-3 days. So what they did, they tied up with the custom officers and they said that whenever we import the steel, if you get our steel unloaded from the ship in a span of 24 hours from the arrival of the ship, we will pay you 1 lakh rupees per consignment. Bribe, 1 lakh rupees per consignment. This 1 lakh, if you want to share with all the officers in your team. We are not concerned with to whom we are paying how much, but we will be paying you 1 lakh rupees per consignment if you get it unloaded in a span of maximum 24 hours. So custom officers were bribed, and whenever the Steel Authority of India Limited ship would arrive, custom officers would definitely give the priority. They would set aside other ships and they would unload the goods of the Steel Authority of India Limited. And Steel Authority of India Limited regularly paid the amount as decided. All this expenditure which was given as bribe to the custom officials was debited to profit and loss account as gift to clients, and deduction was claimed for the expense. Now, income tax officer picked up the case of Steel Authority of India Limited in a scrutiny assessment. So when the income tax department will pick up the case, they would demand an explanation and evidence for each and every expenditure. For whichever expenditure you are claiming deduction, they would demand a evidence saying that you show us the bill, you show us the copy of the agreement. So income tax officer demanded the explanation for the entry. It was written as gift to clients. So what income tax department officer said? Officer said that you can give gift to clients, we don't have any objection, because for maintaining cordial relations between suppliers, customers, giving gift is a normal thing and is a expenditure purely related to your business. We will definitely give you deduction. But the point is, when you say that I have given gift to the client and you are claiming deduction for that expenditure, that same thing is an income for the other person. So you just give the name of the person and the PAN number of the person to whom you have given the gift. For you it is a business expenditure, for the other person it is a business income. Section 28, benefits or perquisites arising out of business profession. So those gifts which you have given to your clients, for you it is an expenditure, for them it is a income. So for them it should be taxed under the head PGBP. So we just want you to share with us the name of the people to whom you have given the gift and the PAN number of the people to whom you have given the gift. So now the Steel Authority of India Limited company was stuck up, because they can't say that we have bribed the custom officers and we have debited the amount to their profit and loss account. But the income tax officer investigated more and he himself came to know about this, saying that this amount is nothing but the bribes given to the government officials. So income tax officer disallowed the expenditure, saying that these expenditures, you can't bribe the government official and debit your P&L account and claim the deduction. For example, you bribe the government officials to the tune of say 1 crore, you debit your profit and loss account by 1 crore, your profit will fall down by 1 crore and you are into a 30% slab rate of tax, then you will save tax to the tune of 30% of 1 crore, that is 30 lakhs. Are you understanding? In other words, whatever bribe you have given to the officials, not to the tune of 1 crore, if your tax liability falls by 30 lakhs, the indirect meaning is the government has done the funding of that bribe to the tune of 30%. Are you understanding? If government gives you deduction for that 1 crore of bribe given to the officials, your income will fall down by 1 crore, meaning thereby you will save tax to the tune of 30 lakhs. The indirect meaning is you are bribing the government officers and government is giving you deduction for those expenses, as a result of which your income is falling down and you are saving tax to the tune. You have to pay less tax because you are claiming deduction for more expenses. So indirectly government itself has funded those bribes to the tune of 30%. See, that is what is the interpretation now. Are you understanding? So income tax officer says, how can we as a government fund the bribes of the government officials? This is not ethical. So you bribe the government officer because of people like you only, these government officials have become corrupt. These people are very good. You have developed a habit of bribing them every time. So this we will not allow you as deduction. Officer disallowed the expenditure. Steel Authority of India filed a case. And this case went up to Supreme Court. Supreme Court simply picked up the Income Tax Act and Supreme Court asked the question, in which section you are claiming deduction? So the representatives of the Steel Authority of India Limited said, sir, we are claiming deduction in section 37 subsection 1 because government has not made any section for claiming deduction for such expenses. From section 30 to 36, we don't have any section which gives deduction for such expenses. So we are forced to come to section 37 subsection 1. So Supreme Court said, okay, so let's move on to section 37 subsection 1. Okay, what is the first condition? Oh, it should not be covered by section 30 to 36. So yes, this expenditure is not covered by section 30 to 36. The first condition is fulfilled. Second, Supreme Court says, is it a revenue expenditure? So the representatives say, yes sir, every consignment we are paying them 1 lakh rupees. Regular basis, that is a revenue expenditure. So Supreme Court says, yes, condition 2 is also fulfilled. Oh, third condition, is it a business expenditure? So those representatives say, yes sir, it is a business expenditure. If we don't incur the expenditure now, we will not get the consignment on time and will not be in a position to deliver the goods to our customers on time. We'll have to pay penalties to them. In our contract, there is a breach of contract terms. If we don't deliver goods on time, we'll have to pay fines to our customers. So for preventing the loss, we are incurring this expenditure. So Supreme Court said, third condition is also fulfilled in that case. Section 37 subsection 1, all the conditions are fulfilled. So deduction should be allowed. The government officer which was representing said that, sir, they have bribed the government officials. It is unethical. How can we give the deduction for the unethical expense? The judges sitting there said that, whatever you say, is that written in the act? No, no. So it is not our job to make the act. Our job is to just interpret what is written in the act. Do you believe all the conditions are fulfilled now? So deduction should be allowed. We are not here to make the act. Our job is to just interpret. So finally Supreme Court gave decision in the favor of SSE. Such kind of similar cases took place, lot of cases, around 4-5 cases of same nature took place in a span of 2-3 years. And once the government officer will lose the case at Supreme Court now, what the first thing that government officer will do is, he will write an email to the finance ministry, where in my case, the case reached up to the Supreme Court, and Supreme Court has taken such an interpretation which appears to be a vague interpretation. They should not have taken such interpretation. He will inform the finance ministry, and the finance ministry in the next budget would come out with an amendment. So to overrule all such type of decisions, finance ministry came out with an amendment in the year 1997 with retrospective effect from 1st April 1962. Law was amended in 97 with retrospective effect from 1st April 1962. Now the question is, if the amendment was made retrospective with effect from 1st April 1962, meaning thereby what is the consequence on those decisions which are already given by the Supreme Court? Will those decisions be revived, or will it be revised? Will it be changed? Answer is yes, because the amendment is retrospective in nature. So the income tax officer will once again challenge the same case on which Supreme Court had already given the decision. He will file a review petition. He will file a review petition in the Supreme Court saying that kindly review this decision. So a larger bench will be assigned, larger bench will refer the Income Tax Act. They will say, no, this is clearly written, deduction is not allowed. So, but the SSC says, sir, this is retrospective amendment. So, retrospective amendment should be read as if this is appearing in the Act since last 70 years. Right away, it is appearing in the Act from 1st April 1962. That is the manner in which you have to read. So, reading that retrospective amendment, Supreme Court will change its own decision, and this time they will give decision in the favor of department. Have you understood this? So, government inserted a retrospective amendment by putting an explanation below section 37 subsection 1, wherein government said that deduction for an expenditure, if, listen to me carefully, in simple language, government said that deduction for the expenditure can be allowed only if it is a legal expenditure. Legal expenditure meaning thereby such kind of expenditure should be allowed to incur. If such kind of expenditure is not allowed to incur, it is an illegal expenditure. So question is it legal to bribe the government officials? No, it is not legal to bribe the government officials. So if you have bribed the government officials, it is a illegal expenditure. That is not allowed as deduction. That is not allowed as deduction. Is that very clear? There was one more such case. Conclusion is, at that Steel Authority of India Limited case, because of this retrospective amendment, fourth point, the decision was once again given in favor of department, because the amendment was retrospective in nature. If that would have been a prospective amendment, then whatever past decisions are given, they will not be changed. Is that very clear? So, I'll read what is written in section 37. This is the simpler version. I have written in very simple language. Act would have a slightly lawful language. So, these four conditions. The fourth condition is what? Explanation 1 to section 37 subsection 1. Last point, we move on to section 37 subsection 1, last point, but very, very important. Now listen to me very carefully. Are you aware about something called as CSR expenses? Corporate Social Responsibility Expenses. See, that CSR expenses, the thought process behind it is what? Whenever a business organization is doing business and earning huge amount of profit by doing business, they are earning from the society. If they are earning from the society, they have a ethical and moral responsibility to support the society in a good cause. By nature, Indians are always supportive by nature. But when it comes to business, everyone will think about business only. So, in India, business organizations were not spending money for CSR. Business organizations were not spending money for CSR. See, few giant companies would definitely spend. Few giant companies would definitely spend money. Ethically, everyone should spend. But by nature, it should be such that, see, by nature, your nature should be such that if you see someone in need, you should help him. But that comes by nature. If you see in this corona environment, even the beggars are not getting money from people. See, if you are having good amount of income, if you see some person begging, you will give him 5 rupees, 10 rupees. But in this atmosphere, they also don't get money. So, if you are passing through some street and someone is begging, you will help him out. But it should come from inside. You should be a person of such nature, helpful nature. So, all the business organizations have a responsibility. It is a moral responsibility. Moral responsibility cannot be forced on someone. Moral responsibility cannot be forced on someone saying that you have to do it, is mandatory for you to do. So, government over a period of time realized that morally every business organization is responsibility is to support this society. But outside India, they are doing, and outside India there is a law also. In India, we do not have any law. So, when the government of India came out with Companies Act 2013, in that they specifically inserted one section, section 135. They inserted section 135, wherein they have given some conditions saying that if the profit of your company is 5 crores or the, listen to me, 500 lakhs means 5 crores only. Listen to me, please. I am not teaching you section 135. I am just giving you an idea. So, section 135, which act? Companies Act 2013 says that if you have earned a profit of 5 crores or your business turnover is more than 50 crores, such kind of conditions are put. If those conditions are fulfilled, then certain percentage of your net profit. Then what? Certain percentage of net profit you have to compulsorily, mandatorily incur for CSR. This was made mandatory for every company by the Companies Act 2013. So, thereafter, every company was forced to incur CSR expenses. But they were incurring CSR expenses and they were debiting it to their profit and loss account. And while filing their income tax return, they used to claim deduction in section 37 subsection 1. In Hindi, we have a idiom. I do not know whether you will understand or not. I am just trying. In Hindi, we say that neki kar darya mein dal. There is a idiom called as neki kar darya mein dal. Means if you support someone, if you help someone, after helping a person, don't go to the entire world and say that I have helped him. Because if you have helped someone, for your good deed, God is going to support you in future. Whenever you do some good deed, you will get something positive in your life. God will work for you. So, when you support someone, when you help someone, if you go to each and every person in the world and say that I have supported him in his bad time, whatever good things God was going to do in your life, those things will not happen. That is what people believe. So, in Hindi, there is an idiom called as neki kar darya mein dal, means you do good deeds and you forget it. So, government came out with an amendment in the section 37 subsection 1, and government tried to explain to the corporates that you do good deeds and you forget. We will not support you, God will support you directly. So, don't claim deduction for those CSR expenses. If you are claiming deduction for CSR expenses, You debit your profit and loss account, you claim deduction, thereby your income will be lower, you are saving tax, means indirectly to the tune of 30%, we are only doing the CSR expenses. Because you are saving 30% tax, indirectly you are doing CSR expenses from the pocket of the government. So government says, do good deeds, God will help you, don't expect help from our side. So government has inserted explanation 2. CSR expenses deduction is not allowed. Where this is written? Explanation 2 to section 37 subsection 1. Have you understood this? So how many conditions we discussed? 5 conditions. Number 1 is what? Your expenditure should, repeat with me, your expenditure should not be covered by section 32-36. Second condition, it should be a revenue expenditure, capital expenditure not allowed as deduction. It should be a business expenditure, personal expenditure not allowed as deduction. It should be a legal expenditure, illegal expenditure is not allowed as deduction. Last one, CSR expenditure is not allowed as deduction. So that same thing is written here in legal language. So I am not reading this for you. This you read at home. This is explanation to section 37 subsection 1. It says that any expenditure incurred by the SSE, I am just reading to explanation. Those conditions you can read, it is in very simple language. This one says, any expenditure incurred by the SSE for the purpose. I come from Mumbai just to teach you. Any expenditure incurred by the SSE for the purpose which is an offense. Is it right to bribe the government official? No, it is an offense. So any expenditure incurred by the SSE for the purpose which is an offense or which is prohibited by law, that expenditure shall not be deemed to have been considered as incurred for the purpose of business profession. Means if you incur some expenditure which is an offense, then we will say that this is not incurred for the purpose of business or profession. In other words, that deduction will not be allowed for that expenditure. We have explanation 2 at the end. It says what? Any expenditure incurred by the SSE on the activities relating to corporate social responsibility as referred to in section 135 of the Companies Act 2013 shall not be deemed to be an expenditure incurred for the purpose of business. Therefore, deduction cannot be claimed. Is that very clear? Now, I have given you homework. What is given? Section 35 AD. Besides that, you just refer to this list. This list, you read it once at home. Tomorrow we are going to just refer it. So, section 37 subsection 1 is also over. Section 37 subsection 1 is also